Okay, well, this should be working now. I had to restart the stream several times. If you're coming and watching the recording, that is what I'll be sorting out here because the audio wasn't working. But now it should be. New stream audio should be working. Okay, let me delete the post on X and write a new one. Okay, well, I hope everyone's doing well. Long time no see. This is a new setup, so I was kind of worried there'd be issues. But all I had to do was unplug and replug in the mic, and it worked. Um, well, the audio quality should be good on this mic. Is the quality bad? Someone's saying that the audio's like a 1967 mic. Probably could do a little bit of tweaking here. I'm going to turn the gain down on this mic. That might help a little bit. Maybe this is better now. Okay. I can change it a little bit. Yeah. This might be better. Yeah. The gain was turned up too much on the mic, I think. Okay. Well, we should be able to get started here. We have a lot to cover. Okay, thanks everyone. Yeah, it's a Yeti mic. All right. Well, where to start? There's so much to cover because I think there's a lot going on, not necessarily today, but just broadly speaking in the market. Lots of interesting scenarios. And in some ways, how I'm positioned is kind of it's a complicated story going back in time to kind of recreate all that stuff. And I don't want to spend much of the live stream doing too much of that. So, but what I want to do is give people context, right? Because we're going to be looking at Bitcoin. We're going to be looking at a lot of different, both bullish and bearish scenarios on both. I posted this. I guess I didn't post the Elliott wave count, and we'll go over it. This kind of quote unquote bearish idea on X the other day. If you've been following my updates generally, you know that I've been primarily bullish, right? Like I I long this low here, so this is a long with a TP up here, and I'm going to carry the rest of that as a swing long. But I do want to talk about some of the bearish scenarios. And I guess for all of those so basically we're going to talk about different scenarios. And I want to give a context for how I trade because like I got a couple comments, and it's normal when you post whether it's a bearish idea or a bullish idea, depending on what people have a bias towards, that someone posted, you've been bearish since 75K, which is way down here, which is just sort of a silly way to kind of encapsulate how I've traded this, because I've taken shorts, I've taken longs, I longed here, I'm long from the bottom here, I'm looking to take profits. I've taken many trades. But what somebody will say, so let's just imagine a scenario. I have this long, and you should understand the idea of this long. I can't go back and recap everything. I made a 30-minute video when price was up here explaining why I was going to long here, right? But let's just kind of simplify the setup. And I ended up getting into a Pico bottom long here. And at the same time, I was trading ETH, and I got multiple winning shorts on ETH, a winning long. We'll talk about ETH as well. And I kind of have like a, I guess you could say like a comprehensive way of positioning in the market so that I'm winning on my shorts ideally, I'm winning on my longs, and I'm positioned for the market to go up or down. And either way, I'm covered in both scenarios. And so we'll be talking a little bit about that. But let's say, for example, which I probably will do this, I'm in a long from the lows here, and I'm interested, my target for that long for my first TP, so that's going to be to take some profits, and the rest will be left as a swing for some of the bullish scenarios we'll talk about. And at the same time, I'm going to take a short. If price runs this high and we get a rejection, I'm going to short the rejection, and it will, we don't know yet, but it will look something like this, is how I'll structure it. And my TPs for this trade, so this is where things get kind of complicated. My TPs for this trade are going to be back into the lows, but I actually have an alternate idea. So let's imagine, you know what? This is going to be the best way to represent this, because although I didn't short Bitcoin here, I wanted to short the market here, but I decided to short alts instead. But to simplify this, because obviously we know the market's correlated, right? If Bitcoin goes down here, alts are probably generally going down as well. And so I shorted alts. My update at the time was, it's not that I don't think we could get a big retracement if we reject here on Bitcoin. It's that I would just rather be short on alts. But to simplify it, let's imagine I just shorted here instead, just to say it's all on one chart. So I'm not, I'm not shorting alts, I'm shorting Bitcoin. But of course the market's correlated, right? So the idea would be, if you're short here and you're taking profits, you're long here, and I'm looking to take profits, this would be a swing long with a TP1 here. And then I'm going to leave some of this open for some of the bullish scenarios, and then I'm going to short here. Let me clean up these pen marks here for a second. So I have a bad habit of turning my chart into a Picasso during the live streams. But one of the reasons I want to take profits here and potentially short down to here is because there's a scenario, like, again, for the bullish scenarios, where we run these lows. And I talked about this in the 30-minute video. There's various confluences here, but we'll just keep it simple. Run these lows in purple into the 786, and I would long this, and I would take profits on my short. So we'd run these lows we established here, and believe it or not, even when price was way back here, I'm already considering all of this. I'm longing this, and I'm already talking about the idea of this level, but maybe I get a TP1 off this long. So a winning trade, I can carry some for the bullish scenarios, and then I long this lower level separately, which is probably for me going to be a run of that low, and a reclaim of the low will be my long trigger. And I think it's okay to run the stop a little wider. So what can be confusing for people is when you have shorts and longs running. And I want, this kind of ended up being a little bit of a confusing, for people who aren't familiar with this kind of idea, confusing on ETH back here. So I was long on ETH, and if we short on ETH, if we go back and we've split this chart, so we can look at Bitcoin and ETH at the same time. Let's go to the 1 hour chart. So at the same time that I was long on Bitcoin from down here. That's that long I just explained to you guys. This is a different pairing, so that my chart's not, my levels aren't on there. So I was long on ETH or Bitcoin from here, and I was shorting ETH up here. And so people said, well, why are you shorting ETH but long on Bitcoin? Well, the structure here is completely different. And there's maybe some bearish ideas I like on ETH. And in the meantime, ETH started going down. And while ETH was going down, Bitcoin was going up. And so I shorted ETH. I took profits. I actually ended up longing ETH here into these highs, took profits. I shorted ETH again, took profits, so on and so forth, right? So in the context of me just sitting in this one position on Bitcoin, which is a higher time frame idea, I'm trading this local range on ETH with shorts and longs. And so in the meantime, you know, you've won 3 or 4 trades on ETH. You're just sitting in the same long here. And what people want to do is they want everyone's trading. They kind of want you to say the market's going to go up or it's going to go down. That's something we don't know. What we want to do is we want to structure trades that are reasonable, that put us into good winning positions and we make money, right? And I'm going to hop over to Sol here in a second, by the way, just because I have a idea that I'm trading in the members Discord, and I'll talk about it because it's sort of in action right now. But anyways, the idea would be that, well, I want to win on this short, I want to win on this long, and let's say I take this short, and let's say I leave, let's say it's 40% of this long running. So I've taken profits, close 60%, and then I take this short as a totally separate idea. And let's say the short gets stopped out. Well, then my long carries on and my short gets stopped out. So that's one scenario. I actually lose this trade. And one way I like to kind of mentally compartmentalize my trades is that there's a bearish alter ego and there's a bullish alter ego. So the bullish alter ego is looking to trade the long side well. And the bearish alter ego is looking to trade the short side well. And oftentimes what will happen is something like this. Let's just say the bullish alter ego gets his TP1, and then the short alter ego gets his short. I get stopped out on the rest of the bullish alter ego's trade, but it was a winning trade. And the bullish alter ego was trading the bullish ideas, which I haven't talked about yet. And then the bearish alter ego has this beautiful short running, hits his TP1, the bullish alter ego takes his trade. And then, you know, the bullish alter ego might be saying, hey, this is nice. And let's just imagine a scenario where bullish alter ego was going to target these highs again for his TP1. But the market doesn't do that, and the market just dumps into the bearish scenarios. Well, now, this short won, and the bearish alter ego covered, but a lot of times, the bullish and the bearish alter egos are both winning all at the same time. And when a big move happens in one direction, the bearish alter ego has this beautiful short running for the bearish scenarios. And you can kind of think about it like what would have been better in any of these scenarios? It's not that there's no risk, but would it have been better to be only a bull or only a bear and not a bull? Well, you have winning long ideas and winning short ideas that can all be played reasonably together. And sometimes you're going to lose trades, of course, right? So anyways, that's what I'm going to explain here is you get yourself into a really nice position because you're not just thinking, I'm bullish, Bitcoin's going up, it's going to go to 500K. You're thinking, where are my longs and where are my shorts? And where are my profit targets? So anyways, so what will happen is if I take a short like this, and I'm addressing this just because, you know, I got a couple comments like, you've been bearish since 70K. I haven't, right? You go through my feed, I've taken a bunch of longs. All in here, I've taken longs. I just took longs on alts. But what people will say is, if you take this short, they'll say, you've been bearish since 18K. I don't think of this as being bearish. I think of it as a technical setup. You have these nice highs, nice technical level. There's some other reasons it's potentially a nice structurally technical setup. And I took a short and it got stopped out. Does that mean I'm a bear? No, I have longs as well. And so what I'm trying to do is juggle all of that between multiple charts. And so I'm setting this all up so you guys have context, right? Because some of this will be over many of your heads. Some of you are members in the Discord and you'll understand these ideas more, or you'll even be aware of some of these specific trades. Now, I will talk a little bit about Sol here. I do have a short running on Sol, and this is the 1 minute chart, but I'm just going to hop over to it because this is an idea from the Discord today. So I'm just going to zoom out. We'll go to the 4-hour chart here. We're just coming into a major, the major GP of the move. That's one of the ideas here. You have this kind of grinding, ascending, impulsing structure. And you have some local highs here. This is that purple line. And so this is just the way I trade, somewhere where I would be interested in taking shorts. And so I'm going to kind of just break this down a little bit. I guess this could be sort of like you see all this nice big volume coming in here. This would be kind of a good breakdown of how I would execute trades at a key level. So we can head over to, because you can probably apply some of this stuff to the ideas that I'll be talking about soon. And sorry if for anyone asking a bunch of questions, I have so much to cover. I'll probably answer questions at the end because I want to get through. I want to get through a bunch of charts, right, and my ideas. But I do think I need to do some of this sort of like explaining of the ideas. So we'll make it kind of educational in that sense. All right, so we're gonna head over to the Discord. So I took a small loss on Sol. I'm gonna explain how I was trading Sol yesterday, and then how I was looking to trade it today. So I took a really small Sol short here with similar idea, but a really wide stop, 7%. So I said, I have a small Sol short here, a small short on Sol, stop at 7% away, so small size. So just from a risk management perspective, you're never risking more than 1%, and sometimes it's less with correlated positions. In my view, that's a really good place to start with your sizing. You shouldn't be risking any money if you're a non-experienced trader. And so I was adding into the lower high of this Sol short right here. So the reason I'm taking this short is because we have this descending structure. We have a single rejection, horizontal level here, and I'm willing to put on a little bit of risk shorting here. I'm sized for a much wider stop, but as soon as that structure breaks, I'm just cutting at a fraction of a loss. I'm not waiting for my stop to get hit. The stop here is representing, in this case, the sizing of the positions. This is giving me a lot of room to figure out what I want to do with this position without taking a full loss. And for me, in this specific case, so lots of things could have happened here, when we have this is really the only structural resistance, which is why I wanted to short there, that's just breaking straight up. This is last night. I'm just going to cut that short immediately because there's no reason, because what's the short really here? This is a big sign of strength. We have this this could be kind of rangy, toppy price action, but in this case, it's actually kind of strong, impulsive, small pullback, breakout price action. So I said, I'm cutting my Sol short while this is breaking for a small loss. So even though I just entered it, my stop's not hit, I'm just going to cut it because this is a lot of strength at a local level. And now we have this kind of impulsing. So I just said, I wouldn't mind trying again higher, but no reason to sit in this personally if we're not getting any weakness at resistance. And so I drew out this yesterday, this ascending structure, an impulse into this. I had my old positions stacked on there. I would maybe look to short something like that. So, obviously we can come back to the current chart here. This idea, we got exactly that, right? We got an impulse up into this ascending structure. That's what I drew out here. The impulse up into this ascending structure. That's where our high is, up into the rest of the GP here. And so now this is the 15-minute chart. Be looking for some weakness. Or alternatively, I said, You could also look to short just the local highs, kind of a similar idea. Short a rejection here, and you can kind of get a pico top short on a local idea, but you could manage, you'd have to manage it into, as a scalp, into potentially running some of it into a long, because you're really shorting into, yes, local resistance, but you're shorting into, anyways, I was just explaining the setup. So that was the setup. This is the idea. So I did take the short here at the local highs, but this was already a TP1. So I explained that. I'm not going to read through every Discord post. That the thing about shorting here is you might be able to run some of it into a swing, but you're really looking to take profits on any strength here because you still have this ascending structure. But what I would be looking at now is, for example, is this double bottoming and coming up, or are we starting to break down this ascending structure? And then I would just take a reasonably sized short, and while this is holding, I would hold my short. If this starts breaking out and showing a lot of strength, I really have a lot of room here to make a decision. Maybe I want to hold for these highs, and I'm sized really reasonable into the position. It doesn't have to be a pico top short. Where I would consider shorting a tighter stop with more size, this is mostly for members, because sometimes I short with really tight invalidation in terms of sizing, is if we came up and ran this local high again, big volume like this, I might short aggressively into a position like that and just chase it down if there's any weakness. But anyways, we'll keep an eye on this. That's kind of the maybe the active setup that will kind of bounce between here on Sol. But we do have a lot to cover. All right, I think we start with Bitcoin. You know what? I just want to just to kind of give a frame of reference, because I'm not going to go over every position, but I'm just going to show a sense of, you know, how I'm kind of looking to trade these ideas. So this is just going to give everyone a sense of how positions are executed in my case. And yeah. Okay. So here's just an idea, you know, there's Doge long ideas, short ideas. So we have a series of trades here where I'm, for example, wanting to take a short up at these highs on Doge. Now I'm just explaining, so I have the idea, I'm looking for weakness. And I took that short. And I'm now looking at the 1 minute chart, similar thing, you know, the short starts printing. We got a big nuke there. At the same time, this was the next day, really nice short. I had a Litecoin short, had other positions. I had taken a Litecoin long locally before that. So I'm just kind of trying to trade levels, lock in profits, trade levels. And so we're going to be talking about some of these new ideas in the context of understanding that I'm actually still in, for example, this Litecoin short. So this was a short I took. Targets are down here, and I'm still carrying some of that. I'm still carrying some of my ETH short as well. I took multiple shorts up at these highs, and yeah. So anyways, I'm not going to go over all my positions, but I have some shorts with profits locked in, because although I'm trading and I have this Bitcoin long, and I really do want to get this level for my TP1 on my Bitcoin long, and I'd be interested in a short here. We'll kind of start breaking down all the ideas here. Okay, just pull everything off. So we can actually re-pull a lot of the levels here, just for context. But let me talk about the bearish idea. So I actually drew this out months and months ago. You know, for some potential corrective ideas. I did kind of an educational post on, you know, we could get a flat, an expanded flat, a running flat, these types of ideas. And I think there's still ideas that this could be a wave B, and we could get our A, B, C correction for a major wave 2 here. So we have a wave 1, 1, 2, 3, 4, 5, A, B, C. I think that is possible. I think we have to just call this 5 waves in this case. The bullish ideas are that we're just in a series of 1-2s, which I think is the cleanest idea. And it's really going to be the deciding factor for me about how I'm going to trade this, which is I want to long this, which I'm long, and I want to also long the sweep of this low. These are probably the cleanest bullish ideas, really bullish ideas. You may even have some descending structure here. And for me, it's really simple levels. So for the bearish scenarios, I'm going to play it really simply, which is I'm going to look for not necessarily shorts on Bitcoin, although I probably will take a local short on Bitcoin at these highs. I'll take profits on my longs. And this is just a short into the GP here. I'll take a short here as a hedge. I'll take profits into the lows, and I'll leave some of that running for the bear scenarios. I will take another long here if I get it. And again, if we break out and we have this, then I'm just trading new ideas, right? I'll set up trades up here. So if we break up out of this range, but while we're in this range, I'll be trading the range as is. But where I really like my bearish ideas is on ETH. So I don't want to talk too much about the Bitcoin specific ideas, more so that I'm aware that there are bearish ideas on the chart. And the reason I like my bearish ideas on ETH is we have this really nice rejection of all-time highs, right? We just tag the all-time highs, reject, and it would not be so surprising to see a move down into some of these deeper levels. And we could actually have a really nice higher degree 1-2 come down and test this level. And one of the reasons I liked the shorting on ETH, and ETH has been quite weak since I started shorting it, let's pull up. Can I just duplicate this? Give me 1 second. All right. So we can head over to the ETH updates here. And I've just been absolutely annihilating ETH. I opened this members channel to the public. I hadn't been trading ETH a whole lot, to be honest. So we can just see here, you know, I scalped the bottom of this and just kind of flexing. All right, let's go back to when I started shorting ETH. Well, first off, I got some really nice setups on ETH. Like for example, you know, shorting this, I took a TP, we rallied from there. I missed the long on the impulse. I didn't get the setup, but then I planned out this trade and we ended up, I took my long here, no certainties. So basically a big win streak, trading ETH a lot. Taking the ETH setup, we get the nice impulse, got my TP1. This is right at all-time highs on ETH. And I started shorting ETH here. So I said, I'm going to look at taking this ETH short. This is the, you know, targeting down to 3K. And this is at the top of this range on ETH. So this is when this range started forming. I'm not going to go into all of the setups, but this is up here. So I started shorting, took profits. I ended up getting a long, shorting, and I've built up a short position from up here. And I do think there's some ideas where I could get stopped out of them. We run up to this high. Maybe I'll talk about that. But one of the reasons I started shorting ETH is because here on the daily chart, we've had this really strong move on ETH from the lows. So 140% against Bitcoin. And ETH is running into resistance. So ETH BTC, would it be so unreasonable to think that we might get some weakness now out of ETH after getting a lot of strength on the daily chart here? That we have these nice highs taken. I think it's the it's the non-log from the last pivot. It's kind of a bit of an awkward fib pull there, but I just think simple structures here on log scale, it's just resistance, right? So when this is happening on ETH BTC, I'm preferring my long ideas on Bitcoin and my short ideas on ETH. And so since then, ETH's had a good 12% loss against Bitcoin. And I think I'm going to follow through with that strategy. Maybe we get something like this on ETH, which is, something like a 30% loss against Bitcoin. That would be a nice kind of technical retracement. And if we get some of the bearish scenarios, what's likely to happen if we get something like this, there's no guarantees, of course, is if some of the more bearish scenarios play out on Bitcoin, and even something like this, like a 12 or 13% move down from the highs, we get maybe an impulse up on Bitcoin, even that could play out quite bearishly on the ETH chart if we get some more weakness. So like a 12% move down on ETH would be about to here. But imagine a scenario where we get a lot of weakness out of ETH and we get something like a 20 to 25% move down. My technical target for longs would be into this 3K region, which would be it'd be a lot of weakness out of ETH. It'd be like a 30% move down. But one thing that people really misjudge is that there's a correlation, but how things are correlated. So people would think that if ETH was going to go down 30% from here into this level, that Bitcoin would have to absolutely get obliterated. That is certainly not true. And I'm going to put the Bitcoin chart on with the ETH chart again. Again, I'm not recapping my ideas too much here, but I'm just going to talk about some correlated price action that we had. Some of you might recall way back here on ETH, I had this idea of ETH coming down into these lows. And, I said, why does this look so good on the chart to me about a move down? And I was actually only looking for this low. We actually bounced perfectly off my level. There was a trend line here and whatever, but we ended up making new lows. But people were saying that this would be impossible, and that would mean that at the same time, Bitcoin would need to return to its August 24th lows. So what people will do in relation on the chart here is they'll say, well, if ETH was going to go from this high, this is when Bitcoin was making its all-time high here, then Bitcoin would need to return back to 50K. If ETH was going to go to its relative low, Bitcoin would have to. And the literal thing I drew out with this idea is, imagine a move or an idea, and this was around 90K on Bitcoin, where we get a move up to about 112K on Bitcoin and a pullback to like 75K or 80K. And I literally drew this on the chart. I think we've already been seeing a lot of weakness out of the ETH chart. Why couldn't ETH have a much bigger move down relative to Bitcoin? And that's exactly what we got. So while ETH was just retesting, or Bitcoin was retesting its all-time highs with a pretty marginal pullback, 30%, it's not nothing. We got a 70% pullback on ETH. And so the same thing I think could happen here while ETH is at resistance is even if we get something like this on Bitcoin, we could get a much deeper pullback on ETH. And so that's kind of my thesis for wanting to short ETH. And if we clean up this chart a little bit, and we will, did I put, let's just get rid of this. We would just have a really clean rejection and pullback from all-time highs. And I think this could end in bullish ideas, and I'd be interested in longing it. I think this would have to be a TP1. Any reaction off of this, setting a limit TP for the short ideas. Now, what happens if I get stopped? Well, right now, if I get stopped out of my ETH shorts, it doesn't matter because it matters, but they're already winning, right? I've taken multiple. I identified this resistance early, and I've taken multiple shorts from here with profits locked in. But let's say that we rally, then I'll get stopped out of the rest of those shorts, but they're already winners. And hopefully the charts I have long ideas on will carry, right? So my ETH short kind of works as a hedge. If the market nukes, I'm expecting my ETH short to really print, some of my long ideas not to work. So yeah, that's the idea. Yeah, someone says the difference now is that ETH BTC is trending up. Yeah, so that is certainly true, right? This is an uptrend. But the idea here was shorting early at resistance and looking to quote unquote catch the top. So, you know, lots of times things trend up and then they top and then they start trending down. I don't mind trying to catch tops and bottoms. I do it day in and day out. For example, Bitcoin was trending down here on one time frame, right? This is a daily chart. I long the bottom, literally the bottom. So let's go to let's go back to Discord just because, you know, I'm just to make the point. Again, this is the idea I've been talking about on Bitcoin for a while, but we can go back to when I took that long setup. All this writing might sound or might look overwhelming, but really just trying to explain the setups well, right? So if we go to this setup, I'm actually, as price is literally at the bottom here, I've already prepared this trade. Again, I'm not guessing, I'm using risk management, but I've already planned this trade in the high time frame channel. So this is the daily chart before the level comes. But I did a whole video on this on X, so before it came. And so if you're following me, you should understand that. But as the level comes, I'm taking the trade aggressively into the level, even on the 1 minute time frame here, saying, you know, maybe we get something like this. And either way, I like to be long off the bottom. So that's kind of what happened, actually. Literally, exactly. Which this is insane. Like, you guys pay attention to this for a second. What is this setup right here? It's into the GP, into this adjacent low, right? That we're looking at, and we have on the low time frames right into the 618, 65 region of the chart. This sort of triple trending structure where I longed here, and that was the pico bottom of this move. So I'm watching low time frame price action as price comes into here. I'm pico bottom longing, and if I get stopped out, that's okay. I'm not trying to pick the bottom. This is one thing that I say with people. I'm not trying to long good levels, and they often happen to be the bottom. I don't care if it's the bottom. Sometimes I take trades where I don't necessarily think it has a high chance of being the bottom, but I still want to be in the trade because mathematically it makes sense. So that's where I'm taking the long. But look at this setup on Bitcoin, and look at the setup I'm trading on Sol. Let's clean this up. I just want to see if you guys notice any similarities. Let's clean up the whole chart here. Let's pull off the alerts just to make it nice and clean. It's not identical price action, but let's pretend it's a long. 618, 65 region, this trending structure. I flip the chart upside down. This is the Bitcoin setup. Are there any similarities between these charts? Yeah. Structurally, there's similarities, right? We have some of this trending structure. In the case of the Bitcoin long, we got more of this on a low time frame, which could also, happen here. We also have, what's this purple line? Well, the purple line is the adjacent, go to the daily chart, the adjacent low, right? So anyways, it's kind of interesting. There's a lot of similarities. But this is kind of how I look to structure trades around key levels. In this case, we have some log levels above. And just looking for signs of weakness. Now, in the case of Sol here, I would just say that you need to be a little bit careful shorting aggressively here. Like shorting here, but taking profits is okay. I won't have much of a swing short running. Maybe another short of this sweep of this highs, but this is locally support into this trending structure. So something to keep an eye on, but I wouldn't open a short right here personally. All right. So for now, my primary ideas on Bitcoin are, I think, very simple. I'm in the long that I've already spoke about. I'm interested in a short up here, taking profits just at a rejection from these highs. If we just break out, I won't take the short. If we do this, I'll take the short, take profits on my long. And then this is the next bullish idea I want to trade. My bullish alter ego for Bitcoin is in a long from here and would take another long down here and is holding their long until here. Some of the pressure gets really relieved, and I talked about this. I talked about this when I took the ETH short, is when I'm in this long and prices ranging and chopping here, well, I also have the pressure off this position just psychologically because I'm printing an ETH short at the same time. So while I was in that Bitcoin long and it was chopping sideways, it was actually a slightly trending structure in some ways. ETH was nuking locally in a pretty decent range of about 6%, and this short was printing. So it's like I'm not really that worried about my Bitcoin long, moving my stop to break even or anything like that. But and I also had other positions. So let's get into actual setups and ideas on a couple different charts. For now on ETH, all I'm doing is sitting on these shorts from the highs, and I don't really have any desire to add into those. Like there's actually so many things that can happen here. I wouldn't be shocked to see, if we get that level on Bitcoin, which is here at the GP, what is that? That's going to be, there's a lot of strength out of Bitcoin, obviously, relative to ETH, right? Like Bitcoin is going higher, ETH is not across this range. So this is about a 4% move on Bitcoin. And then on ETH, if we got an equal move, it would just be into these highs. There's a nice technical level up here. And if we wanted to, I need to rethink some of these Elliott wave ideas probably, but potentially a leading diagonal here. And so you could have something like a 1, 2, and then the bear scenario plays out. I like to short resistance. I don't just like to open shorts guessing where price is going to go. So I wouldn't just open my short here on ETH and say, well, I think it could go down. I want to position myself at resistance so I can get into a winning short, lock in profits, and just carry the rest. I don't like shorting the lows, shorting here, shorting here, shorting here, and constantly being underwater. So in that said, the ideas I'd be interested in on ETH are probably another rejection here, which is where I have my current positions getting stopped out, or just a move up into this high, which honestly looks a lot. It just looks a lot cleaner. Just tag this high, and that's a really nice short setup. I just don't know how likely it is we'll get it. But it's more, if I get it, I would take it. And nothing wrong with actually running your stop above the 786 in this case, because it aligns with this high. So this is also this is a structurally relevant idea for a rejection, but this is a really nice idea with the 786 aligned right at this previous high. And so you have, I'll flip the chart upside down. This is another idea setup I'll trade a lot. So this looks like this, and you tag this high at the 786, and that's actually my Pico bottom long on Doge. On the daily chart is this setup, right? So this is where I have my swing long on Doge, and we got a nice 100% rally. It's actually the identical setup. It's right into the 786. If it was pulled correctly. Oh, I actually ran through the 786 a little bit. That's kind of funny because I thought it's like I had my chart pulled wrong. But yeah, that's where I entered Pico bottom on Doge. So I would probably say that all of this is targetable on ETH for a potential lower high. And although I might execute the trade with a tighter invalidation along these highs, and kind of similar to the Sol idea that I'm talking about, try to scalp my way into a swing, I would say that if you're just wanting to set it and forget it type setup, you need to probably allow for price to move up into this high in terms of sizing and a stop loss. I haven't really been looking at the chat here, but somebody says, hate to see you looking at shorts on ETH. I'm heavy in spot ETH. I don't know what's going to happen, right? I mean, price could just go straight up. Here's the thing. This is just the reality. Price can either break out or it won't. We're just at all-time highs, rejecting currently locally from all-time highs. You're heavy in spot at all-time highs. I mean, if you see price retrace significantly, that shouldn't be something that should surprise you. I mean, but you know, it could break out. You're hoping for a breakout, basically. And that could be based on things that are valid and reasonable. But, you know, if I'm swing long on ETH, do I really want to be primarily swing long just at a rejection from all-time highs or from support? You can hold a spot position for long term, but just what I would say is if we get a 25 to 30% retracement on ETH, I don't know what your thesis is for ETH, but would that invalidate it? I mean, I'm assuming you're hoping for 10K or 15K or 20K, right? So you're going to have retracements in a position on that time frame. What I would prefer to do, like a lot of my swing longs are on alts from lower, and so I have a swing long on Doge, but I also need to consider protecting that position. And so by protecting it, I mean I might be looking for shorts on something like ETH, or even sometimes shorts locally on Doge, and which I did take a short on Doge, but I took it also into a winning long. So I had the long idea down here, another simple idea on Doge. I'm not going to go into all my old trades, but a long idea into this high and trending structure, hit my TP1, and I have some of that new long position running. But I also took a short here that did not work at all. And so my longs are carrying, and that short stopped out. I have two scenarios on Doge that I'm looking at personally. One could be something like this into these lows. And the other kind of leads to the same idea, which is probably something like this. So, you know, maybe we push up into these highs, and come into these lows. This was an intermediate long idea for me. It's so hard to explain this. You know, it's so hard to explain this in some ways because I'm not guessing where price is going to go. I don't really care. I'm just taking trades with invalidation. If a trade doesn't work, I cut it. If I get the setup, I take it. And it's kind of funny because if you're a member in the Discord, I think this is good. I mean, I think it's good to explain this for context. So this is the altcoin channel. So Bitcoin has its own channel, and I separate high time frame, medium time frame, low time frame, just so I can do kind of more execution stuff and talk about order flow, which we will be looking at a little bit. Low time frame ideas, which is more like scalping. This kind of sucked. I Pico bottomed a long setup here. I literally longed right here. And I decided just to close it at entry, and then price went straight up, and it would have been like a 9-hour setup. It's okay. That was an unfortunate, but that was during my big streak of winners. It's okay, I guess. And I had a big ETH long at the same time. But anyways, the alt charts, I'm just posting a bunch of various altcoin ideas. So this is back in 10 days ago. I was saying I have, and we're going to talk about some of these ideas for various alts, but at the same time, I have the deeper setup that I'll talk about in Litecoin. I have an intermediate setup. And so the intermediate setup would be like this. I take a long here, I TP1, and then I carry the rest for the bullish scenarios. I'm already in this short from higher, right? And then I posted my intermediate setup for Doge. So the same thing on Doge. I'm looking for these lows to get taken. It's an intermediary trade where I'll take profits into this descending structure and let the rest run. So TP1, let the rest run, because there's bullish scenarios, I think, that are worth playing from there. And even in the bear scenarios, you're not expected to get a bounce from there. And so I posted here just with the single setup for anyone confused in the Discord. So instead of having that I'm short from here, but I want a long here, TP1, hold the rest, and then maybe add to longs down here if I get stopped out on the rest of this. This is just the single setup, right? Long, TP, and just explaining how I'd execute the trades. When Doge came to the lows, I'm saying I'm looking to take the long on the reclaim here. Explaining, looking for a little deeper, and then we'll long the reclaim of the low. So I'm just going to go to this here. So that played out really nicely on Doge. Let's get rid of this primary setup here, which was just a long into these lows and a TP into these highs. And so I got that. And I did take the head short that got stopped out. So I'm in this long and I'm in a swing long, but I'm also interested get rid of this. I'm also interested in this long into the lows. This is, I think, very simple structure. So it's a similar idea. Price comes and takes these equal lows. And I would swing long this at around 18.8 cents. I'm not guessing. I might not get that trade, right? I got this long and I waited for it. I might not have gotten it. And I might not get this long. But anyways. I'm mostly bullish on Doge. It's one of the swing long positions I have, and all of these positions I'm trying to carry towards all-time highs. Also interested in a long setup down here on XRP. I'm not going to talk too much about this one because it's kind of a little bit complicated with there being a lot of technical levels here, but not a lot of structure here. So you could probably trade it into this low. I did a whole write-up on how to approach trading this, and it's just a lot to go into. Litecoin, I posted this on X. I quite like this intermediate idea that I didn't get. I still think this is probably a reactive level to trade, but the primary idea for me on Litecoin would be something like this. And if we take a little longer to get there, then we have a trend line confluence. Just taking all these lows, and I would long into those. Obviously, there's setups every day that are swing trade setups, but I mean scalp setups, but those are the swing setups I would be interested in. Sometimes you're waiting days, weeks, or months to take. I'm going to answer some questions. Yeah, it's so I can see it kind of being overwhelming to go through all of this, right? It's, you know, I think I do a pretty good job of breaking everything down in the Discord of exactly what I'm doing and why and, you know, where I'm entering and all that stuff. I can understand that, you know, for people to keep track of the overall, you know, your overall goals and strategy in the lifetime of a position can be tough, which is why I do like to just simplify setups into individual setups. So you're really thinking about levels, structure, and ideas. And so for me on Bitcoin, this is an important level for a TP and potential short. This is an important level. If this breaks down, then we start looking at the important levels down below. But hopefully positioned well for either a move to the upside, which I would be here on Bitcoin because I'm Pico bottom long. And I could get myself positioned well for a move to the downside as well. Okay. Let me just do a quick scroll through the comments here. I'm starting up a little bit higher, and I'm not going to answer every question. I just want to get a sense of the questions. I do want to take a look at order flow as well. So we'll do that. Yeah, and right after I said that, I see someone says, "Can you look at order flow at some point?" Depends on someone asking, how do you decide where to TP1? It depends on the setup, right? Like let's just give an example really quickly. Why would I, like you're saying, sometimes it's really close and sometimes it's further away. Well, what is the structure that you're trading, the time frame that you're trading? So if I'm trading like this Sol short, I entered a short up on the 5-minute chart at these local highs. Yes, there's a high time frame level at play here, but my actual entry trigger is on the low time frame. It's confined into this structure. So where am I going to TP here? You know, I remember we had a conversation about this where you were saying like, well, I think it was about the ETH short. So hopefully I'm remembering this correctly, but I think I remember the premise of the question. And in your case, it wasn't about TPs, or in that case, it was about entries. Like, why enter here instead of waiting for the highs? Because had you waited, let's go to the 1 hour chart. Had you waited to enter your short here, it would have been a higher risk reward trade, right? So if I didn't enter here, let's just call it this. It's 3R. But if I entered here and waited for the sweep of this high, then it's a 7R trade. And I said, well, if you entered here, it would have been a 0R trade because you would have missed the trade, right? It was actually here. It was on this move. And you know, you have a 3R trade or a 4R trade in one setup, and you have a 0R trade because that never came. So my point is that you can't just think about the risk reward of a trade. You have to think about what is happening, right? So I could say well, I want to short this high, and it's going to be, let's call it a 8R trade. Okay, that's a nice idea. I'm going to short this high and into these lows. That's my idea. And that's the setup I want to trade. Well, we could remove all of the context out of this position, and we could just say that's the setup. But maybe we start to think about what's happening. Well, what's happening is we have a range forming here, another rejection from the range. Okay. We have an uptrend happening here. Where this entry as an entry starts to look less and less likely. And it's not to say that you have to just chase a trade randomly, but maybe you start to think about what is actually happening, right? And so the same thing here. If I'm going to short from here, well, I think this is an okay idea at the high time frame levels, but why would I TP into this and just say, you know what, if I want to add to my short on a breakdown or something like that, I could, but on the structure I'm trading, which is the 5-minute chart, this is support. And instead of me thinking, let's just say the setup's like this, instead of me thinking like, yeah, but that's only 1R. Why would I take profits if it's only 1R? It's a reaction off of support, and you're trying to trade what is happening, not just, a risk reward return. So another example would be like this. Let's just say that you're in this short already, and your target is these lows, and we start breaking down, and everything's going really good, and lots of weakness. This happens, this happens, this happens, and price starts getting a really rounded, grindy structure here, something like this. And you don't want the trade to only be 4R, you want it to be 7R, but you're starting to ignore everything that is happening, right? So, it's not so simple. I think the best thing, or the best example, which I tried to give in quite a few setups, was, let's just say that you have a setup that looks like this. Well, I actually gave this example. I don't want to go back into the Discord too much, but because I literally just wrote it all out at the time, it's almost easier because it answers this question, and it does it kind of perfectly. Yeah, I'm not gonna do it. I think that's not what people want me to do on live streams, is go through old Discord posts, but they're really good. I mean, they answer a lot of the questions. I guess I'll have to scroll back and forth in the comments here. But anyways, I don't decide based on the risk reward of my setup, right? I want to trade what is happening. So if you get like a really strong quote unquote signal, if you're scalping, for example, then you just act on it. You don't know what's going to happen. But if you're constantly trying to just target a risk reward, then you're going to have a hard time making money. Risk reward is like a general way of structuring a trade. So let me give another example for you. I kind of did it on Sol, but let's just say, like when I entered this short here, let's say you enter it like this, and it's a 2R trade from top to bottom in terms of how you're sized. But you can actually have the luxury, and I think the alternate entry idea was taking this high. So if I remember correctly, yeah, I mean, I do remember correctly. So I'm just going to go literally to when I opened that short position in the Discord. All right. Because we can just reference back and forth to the chart and the explanation here. Because it's one thing to talk about something in hindsight. It's another thing to be doing it live, right? So I said, this is the short I was taking. I'm looking to try this short on ETH. So if we all the levels aren't on the chart, but this is, and let's just clean this up. And this ended up being a Pico top short, right? This was a short here. And the idea was to come up and tag this high. So looking to try that short on ETH. I said I've already opened a 0.5R position. So that was before. So that means I put on half my risk. Zoomed out, the short setup looks like this. And so I said, if this breaks down, I'm just going to add to my short. So what am I doing here is I'm saying, yes, I want to short this sweep of this local high. This is the 5-minute chart. But why would I ignore what is happening here? Because what is happening here on the chart in real time, and I want to actually go to the 5-minute chart, and we can even go into replay mode just to make the point here. What is happening here is prices ranging. We also had the weekly VWAP, and we had a couple different you know, kind of soft confluent ideas like a descending structure and whatever. And so I'm basically saying, well, I want to short here. This is my setup. But I'm not going to ignore what's happening, which is ranging, and this is a rejection. I actually posted, I took an 800x short right there. Kind of as, not a joke, but just, I don't know. It's just kind of showing that the value of like high RR trades. I think I risked, it was something like $120 here and made $9,000 into this low. But anyways, why am I ignoring all of this happening? Because I want to short up here. Why not just take the short? I have invalidation up here, and I probably end up in almost the identical setup anyways by not ignoring what is happening here. And what you can think and how you can think of your risk and your reward in this case doesn't have to be one-to-one to how you're sized in the trade. So for example, I just did this with Sol. Your sizing is this, but your risk reward on this setup could actually be something like, it could be something like 6 or 7R. You're just not taking a full loss, right? So you might even cut this at like a fraction of a loss, like 0.5R. If you're watching this and then this pops and you say, okay, I'm going to cut it and just wait to see if this comes. But you're sized so reasonably here that even though you're cutting the trade at any strength here, you have the choice of just being in a nice short position with pretty minimal risk. I mean, I cover all this in the educational materials. It's really hard to not to explain some of this without explaining all of it, right? Because oftentimes what happens is people get really thrown out of sync with the market because of how they're sizing their trades. So let's, what's a good example? I'm just gonna take any example here. Let me go to Bitcoin. Okay, let's just say we're talking about a short here. So let's say the market is trending down here, and you're looking for a short that looks like this, which we got. But as the market's moving down, it's going lower and lower and you're looking for a short, well, why not put on a short somewhere? If you're getting a lot of weakness in a breakdown, and why not literally size it like this? This is a 2R trade, and say you enter here, and you can literally just cut it at like a 0.1R loss if you start getting any strength. So this would be like shorting into weakness, and your actual risk reward ratio on your trade in this case is like 20 to 1, 15 to 1, 10 to 1. But your size so reasonably is so easy to enter and just let price action play out a little bit, and you can just cut it at essentially break even. But you're still getting the equivalent of a 2R trade, but you're actually getting 20R on your risk. Does that make sense? Like, here's a good example. When I took this ETH long, my risk was $1,000 or something, and I made $26,000. So let's just go to this. This isn't my main position, right? It's showing. I will pretty much never show a main position, but it's showing that you can literally risk. For me, it's a fraction of a stop loss, right? But I have a Pico bottom long with a fraction of a stop loss. So say on a swing position, maybe I'm risking on my swing setups $20,000 or $30,000 or something like that. I could risk $1,000 to trade at a Pico part of a level and then just cut the position for 1/10, 1/20th, 1/30th of a stop loss for some setups, right? Because you have to be sized appropriately. We could actually see a market nuke here too. Like, kind of curious to see what happens here. This looks so nasty on ETH. But man, look how weak ETH is compared to Bitcoin. Just saying. I mean, ETH was literally straight up against Bitcoin. And the moment I started longing Bitcoin and shorting ETH, ETH has just been like getting obliterated against Bitcoin. Kind of cool. Anyways, decide where to TP based on the time frame. I would just love to see some of your setups. Like one thing that you should notice if you look at my Discord updates, like people, do you notice? I mean, you should, that I'm often TPing and getting TPs hit and TPing into resistance, or TPing at signs of strength. So a good example would be, was it you that even asked me this exact question? When ETH, it's kind of crazy when we think about all this price action that there was a 9R short setup here, but this setup was a short setup on ETH, and it ran to like 7 or 8R. The target was down here, but I TP'd on it early, and so I'm just going to full TP here. And someone asked, why are you TPing here instead of waiting for the low? And if we went to the 15-minute chart, it basically looks like this. It's a range, and then price is like doing this, right? It's like, why am I risking for 7R for like an extra 1R when price is ranging, looks really bullish here? Why wouldn't I just take profits? And that's just a case of just paying attention to what's actually happening, not that you want to be an 8R trade instead of a 7R trade. I mean, I've been on just an absolute tear, honestly. Just an absolute tear. Like, probably borderline most traders will never see in their careers. Eyes on Soul. So we have some descending structure, a break of structure into resistance. This is, again, where you don't have to short the top. Just size it reasonably. You could literally be in a position like this. Targets for me are 156. This isn't financial advice, by the way. I lose trades all the time, but this is my idea on Sol. Something like this is a 7R trade, right? If you have your stop well above these highs and you just enter the trade, it's a 7R. If you get a lot of weakness, great. What if this happens? You have to stop out your trade? Probably not. You know, you get a little bounce, a little retest here. Some people might, in this case, be waiting for the retest. So they might be saying, well, I don't want to short the local bottom. I want to short the retest. And in this scenario, they're in the same trade. I mean, it's like a fraction of an R difference. You just have to know how to size your trades. So if you don't understand how to size trades, then you shouldn't be trading with real money anyways. But let's say you're just in this trade. If this happens, just sit in the trade. You're going to probably just be in the same trade. If you start getting more strength, you can always just close your trade. And you're closing it at 1/10 of a loss. So your actual risk reward, if you're risking 1% here, so your stop's 4% away, you're risking 1%, 1/4 of your account balance is into this trade. And if your stop gets hit, you lose 1% of your account. If it works, you make 7.3%. So you're risking 1% to make 7.3%. But in actuality, a lot of times you could be risking a quarter of that, right? A lot of times you're going to see signs of strength that allow you to get out of this trade early. And so you're actually getting like 30 to 1 on your risk. So you're risking like 0.2% for 7%. Because you can just get out of the trade and you don't feel the tension of, oh my God, I just took a loss, as if you're trading it like this and this is a full stop loss, right? You're not trying to turn into a 100R, 30R trade, taking a full stop loss here. Your full stop loss might be up here, and you have a lot of flexibility to figure out what you're going to do in here. And if you take a loss, you've actually only taken a quarter of a loss, or 20%, 15% of a loss, something like that. And you can always just re-enter the setup. And you could trade it 4 or 5 times. Hopefully it doesn't come to that. And you could trade it 4 or 5 times and that'd be the equivalent of 1 loss, right? But sometimes you'll just get out of the trade if there's strength and price will impulse. You took a quarter of a loss or 20% of a loss, and then you enter again on a new setup. So you're really getting like 30 to 1 on your risk, but you're sized appropriately for soft invalidation. I'm going to make a whole video on this because I've done a lot of write-ups on it. Is if you size your trades reasonably, you're going to get into so many positions that are easy to get into, where you're not sitting here thinking, watching the 15-second chart being like, oh my God, we're bouncing. I just entered short. We're bouncing. I got to cut it. I got to get out. It's like, let all this play out. See what's happening. Give yourself lots of time. If there's strength, and worst case scenario, price goes straight up and you take your 1% loss, right? But it's just a great way to get positioned. You can use lower time frame structures, but just don't size every trade as if it has to be the peak or bottom of a setup. And you can give yourself room to soft invalidate a trade. There's nothing wrong with using hard invalidation either. There's nothing wrong with just saying, I'll just take the full stop, right? But why not get into the trade? It might be the Pico top before move down, but you don't have to wait to short the Pico top in situations like this. Just size it reasonably. Getting asked about rate cuts, if I think they'll affect the market. I'm not sure. I don't really pay too much attention to that. I also scrolled past a ton of comments because I got a new mouse that has like the freewheel scroll. So it's like I scroll and then it scrolls 30,000 times. Gotta get used to that. it's hard. It's hard to one thing I like to do in the Discord is like distill all of the complicated ideas that I have in my head into simple concepts. And yeah, I think I think it can be kind of tough sometimes to do that. But I actually did specifically trade this setup with that exact idea in mind, right? So I don't really like shorting so late into a rejection all the time, but it's perfectly reasonable for me to take a short into this, sized really wide, like I did the other night, I explained in the live stream, and then just cut it at a fraction of a loss, right? So if I'm shorting into this kind of downtrending structure or whatever it is, if you take the short and decide to just cut it at literally 1/10 of a stop loss on strength, I got exposed to the really bearish scenarios of a sweep of this high with really minimal risk. I just sized it appropriately. And so I could just cut it and say, oh, I'll look again tomorrow and maybe we get a move up into this. And I'd look to short higher. And again, the same thing's happening here. So now we've gotten the move up higher. We have this weakness forming. Why not get exposed to the bearish scenarios really reasonably with really minimal risk? It's not you don't make the risk minimal based on your certainty of what's going to happen, right? You're not saying this is certainly going to reject, so my risk is small. You do it with your sizing. You size appropriately. And if you don't understand, I think we did so someone was doing the math. We've done it many times. I explain it in all my risk management videos. If you don't understand what someone who makes 5% a week, what their account looks like after, if they start with $1,000, let's say in their trading account, or if they make 5% a month, what their account looks like in 5, 6, 7 years, 5% a week, you're worth hundreds of millions of dollars. And there have in fact been many is kind of a strong word, but documented cases of traders starting with $5,000 to $10,000 and over 9 to 10 years trading that into $100 million, not risking more than 1% per trade, earning something like a 6, 7, 8, 10% a month return, right? So, when if you follow my trade setups, you'll know that I'm performing oftentimes beyond that threshold. But what the problem is so many people don't know the math of compounded returns, even with a small trading account, that they don't understand. Like, I'm kind of interested to, everyone should go to my YouTube channel. It's free, and watch my risk management videos, because it's mostly about explaining that risk management it's not just about preserving your capital. It's just the only way to be profitable consistently. But what people don't understand is they think, well, I only have $1,000, and they'll say this, right? They'll say, I only have $1,000, and so I can't afford to only make, they'll even say a high number, like 20% per month or something, which is an insanely high return. Like if you're making anywhere from 5 to 7% a month, you are in the top performing traders in the world. And it's not a matter of what you want, it's just a matter of reality, right? Every trader in the world wants to make money and make as much money as they can, whether they and do it as consistently as they can, right? Like, your goal as a trader is to not be playing the lottery anymore. You don't want to play the lottery. You want to have a consistent return. We actually had a member, he wrote me a thank you post, which was really nice. He's been in the Discord for almost 3 years, and he shared his equity curve and over the last 2 years, and it basically looks like this, right? Mini trades straight up, and he's done 400% on his account. He's done 400% on his account in 2 years. And what people don't realize, there's going to be lots of people that do 400% faster than that, right? You'll see somebody, it's like, oh, I bought Poop Coin, and Poop Coin went up 400%, I made 400%. Their equity curve looks like this, and probably actually just looks like this, honestly, and then never recovers. It's just a million people doing a million different random things, and some of them made 400%. If you have an individual person that can produce an equity curve over years that looks like this is unlimited money. His equity curve, so his account went from $2,000 to, did it go from 2,000 to 8,000, I think, right? I think that was what it is. It went from $2,000 to $8,000 in a straight up grinding equity curve. He literally needs to change nothing in what he's doing, and 5-6 years from now he'll have 10 to 15 million dollars, and he will. I'm not saying, you know, oh, if everything went, literally change nothing. You are proving what you're doing, the variance is very small, right? You don't have to change anything. Your variance is so small. Your equity curve just looks like this. Just don't change anything. Keep doing what you're doing, and you'll have turned in 6 to 7 to 8 years $2,000 into $10 million, and you'll have a $10 million trading account. That is assuming, and I'm assuming this is the case with this specific person, they're trading something like Bitcoin. They're trading something with, I think they're also trading Forex and things like that. I'm not 100% sure, but they're trading things that can support. There's almost no change whether you're trading, you know, a $5,000 position and $1 million position, right? It doesn't change your strategy at all. So what people don't realize is that that's the only way to succeed as a trader. And they think that making 10% a month, or, you know, in this trader's case, they're making like 20% a month, that it's not, they won't be able to accomplish their goal. So they need to trade more. The market doesn't care what you want. It doesn't care that you want to double your account every month. You cannot double your account every month. If you could, in, you know, 12 months, you'd have all the money in the market. Here's the answer to your question. Can you double your account every month? Well, have you ever heard a story of somebody who started with $1,000 and a year later they had every dollar on earth? Well, if they didn't, if you haven't heard that story, then that means no one's ever done it. Why has no one ever done it? Because it's not possible. I mean, just from a liquidity perspective. Is it possible to double your account in a month? Yes. You can have a great month. Is it possible to double your account, like with trading with low funds and really aggressive strategies, with certain things you could do with small amounts of money that you couldn't do with large amounts of money? Yeah. I mean, for example, if you're scalping ultra tight invalidation type setups with like $5 stop losses, it's probably not going to affect the market. Like if you were doing that with $10 million, right? $10 million is probably your actual, if you're trading like a 0.01% stop loss with $10 million, you're probably just gonna have a bad day. Yeah, what people don't realize is that they think the only way, so someone says, Lucky, it is hard. Fuck, I've been trading for 2 years and made insane progress and became profitable from August, but it's so fucking small. LOL, it is around 4 to 8% a month. I don't even know if you wrote that before I started talking about this, or if you're responding. You need to do the math. 4 to 8%. Why is 8% a month worth hundreds of millions of dollars? It just is. If you can make 8% a month and you can do it consistently, let's call it a guarantee. Your equity curve looks like I just described. That is guaranteed tens of millions, hundreds of millions of dollars a month. I mean, tens of millions or hundreds of millions of dollars of value, almost starting with nothing. I mean, start with a few grand, because that's just how the math runs out, right? Like, for example, Jim Simons made on average 61% a year with his fund. And he did that for 40 years straight. That was his average. It was like 61 or 62% or something like that. That is, you know, a little more than 6% a month that he made. If you had put 10 grand into his, I don't remember the exact numbers, but it's something like, if you'd started with $10,000 in his fund at the beginning, and 40 years later, you'd have like, the number is like $200 million or something, with him making 6% a month. So that return is people investing billions of dollars into refining their trading edges and algorithms, and sometimes doing illegal stuff, manipulating the markets, whatever. But what people don't realize is that when you say I can only make 8% a month, you're basically saying I can only become a multi-millionaire in 5 years from nothing. I can only become a multi-millionaire in 8 years from nothing. It's like, why is that a problem? Why are you telling, like, if somebody shares their equity curve and they're saying, look at this. Actually, that member that we talked about did say, like, I know it's not much to a lot of you guys, but for me, this represents insane progress, all my bad habits that I've overcome, all these things. But it's like, I know this ain't much to you guys, but I'm going to turn $2,000 into $15 million in the next 7 years. It's like, well, that would make you one of the best traders. You are currently one of the best traders alive. You're above top 1%, right? So, but I think a lot of people also just don't understand the math, and they don't understand reality. Like, they think everybody's making 5,000% a week. That's not what people are doing. And so they'll even throw away all of the things they're doing well because they don't realize the path that they're on. And yeah, it's you need to speak reality to people. Like, most people live in a total fictitious reality where they think they're going to turn their $1,000 into $100 million in 6 weeks, and that people do it all the time, right? Where in reality, almost everybody, 90% of people are losing money in the market. A very small percentage are making money, and if you're producing an 8% return, well, let's put it this way. Tony Lars, the one who said it. If you have a track record of making 8% a month, and that, 2 years from now, do you think people are going to be lined up to give you money? If you're going to be making money, but it's like 5 years from now, you're consistently making 80, 90, 100% a year. That makes you one of the best performing money managers, right? It's a little different with day trading, and a lot of funds have some controls in place that day traders don't have. But yeah, okay. Let me just. I'm kind of losing. I kind of like them losing viewers. Like, I just noticed, viewers have gone down 50-60%. But that's good, right? Because this is like the kind of thing that people aren't interested in. But so Tony says, but fucking takes so long and mentally frustrating round trip whole profits because sometimes you encounter losing streak, which is inevitable. I'm like, oh my gosh, yeah. Obviously, you're going to run into loss streaks, whatever. It takes a long time, but it doesn't take that long. Like trading is a marathon, obviously, right? You're trying to just consistently. You can only take the money from the market that you can take. And you can take as much as you can take. There's no real limit in a practical sense, other than the money that exists in the market, to what you can pull out of the market. So you can produce extreme edges, right? Like, I don't want to tell anyone, I'm not telling anyone to just be satisfied with, 3% a month, because that puts you in the top, 20% of traders or something, or the top 10% of traders, or to be satisfied with this. If you can do it and you have the edge, then do it and exploit your edge. But so many people come into trading with such a ridiculous expectation, where it's like, okay, I have $1,000. If you laid out the facts to them and you just said, like, let's create a fictional scenario. I say, okay, you have $1,000. It's going to take you 8 years to make 15 million. You wouldn't say, but you can just do it from now. You can start doing it now. You have to consistently put in the work. It's gonna, it's basically you just repeating the same kind of boring things over and over again every day, and that's what trading is. And it's not really like a high octane thing. You just want to consistently pull money from the market, and it's gonna take you 8 years. You'd say, of course I'll do that. 8 years, I'll have $15 million from starting from nothing. I have nothing, and I'm gonna have $15 million. But people approach trading where they think, No, I want to make $75 trillion. You say, what? Yeah, I want to produce $75 trillion over the next 8 years. It's like, you're not going to do that. But they don't say $75 trillion. They say, I want to make 100% a month. I want to double my account every month. Oh, so you want to make $100 trillion. No, I want to double my account. Well, if you're doubling your account every month, you're going to make $100 trillion. And they say, well, I'm not going to do it forever. I'm just going to do it until I have $5 million. It's like, well, why wouldn't you do it forever? Why isn't everybody else doing it? Why isn't everybody else doubling their accounts every single month for years? Because they can't, right? I mean, and why do you think you can? You just started trading 2 weeks ago. Why do you think you will outperform and my point is this, and I'll get off this topic. Most new traders base expectations for what they want to accomplish, their goals, put them at multiples the best trader who's ever lived. The best traders who have ever lived. And that's their bottom line. They're saying, I want to at least do this. It's like, okay, well, you'll outperform the best traders that have ever lived for the last 100 years by a huge margin if you do that. Is that a realistic goal for a new trader? That they will outperform, starting off with no experience, knowing nothing, the best traders that have ever lived for the last 100 years? No, that's ridiculous. But they don't realize that that's the scenario they're setting up for themselves. Yeah, so Johan says 5% per month is 80% a year. How many get that kind of return from the markets? Just to put in perspective of the real world and not X, where everyone's finding 100X trades and gems all the time. And that's the problem, is the perspective that people have is like, oh, hitting 100X or 1000X is like kind of another day in the office, right? In crypto. That's just not true. People are not consistently hitting 100X and 1000X. Everybody lives in like La La Land, and they're basically being set up to be shield shit and lose all their money. Well, Nico Loomer, you said this is probably one of the most mentally frustrating professions. So it is, I agree, if your expectations are based in a fantasy. When you start putting your expectations into what the market actually is and what you can actually do, then it's not as frustrating, right? Because it's very frustrating when your expectations are one thing and your results are another thing. But if your expectations aren't based on reality, then it's going to be frustrating. Someone says, when you enter, do you enter as price turns around, or do you wait for price action like candlestick patterns? It depends on the setup. There's so many different setups. Like there's like a swing failure kind of setup is literally just price runs the low and you enter on the reclaim. I mean, yes, sometimes price reclaims and you get stopped out. Oh, you're going to lose a trade. But there's other setups. There's like it's kind of happened right here. There's these grindy, rounded impulses. This type of setup, you could enter aggressively at the highs here with the stop under here. There's just different setups. It just depends what you're trading, how you're going to enter it. If you're trading with order flow, which we can look at here, your setups might be based on that. Like right now, I put hyper liquid order flow. I'm kind of curious to keep an eye on it, but I'm not. It's showing more of a bearish divergence, but I haven't really been paying attention to it and haven't gone back into history. But right now on both Bitcoin, BTC, USDT, and Binance and Bybit, we have a pretty big bullish divergence forming into this grinding lower grind downtrend. And so this might be something that you trade one way, which could be a break of the downtrend or aggressively into the lows. And the way you enter the trade and structure the trade is going to just depend on the setup. It's not like you necessarily wait for the same thing for every trade, right? Because trades are taken for different reasons. And you could call those different systems, right? You could call those, or different setups, or different whatever, is how you enter a trade, why you enter a trade, how you invalidate a trade or get out of a trade, depends on the setup. And I have a pretty big repertoire of setups. I mean, I can trade the 15-second chart with certain setups, and I can trade whatever. But you're ultimately trying to evaluate a EV positive outcome. So sometimes you're not trading the most probable outcome. You're trading something that it could even be a 30% chance, but it pays you 10 to 1, right? So you take it not because it's the most likely thing to happen, but you might take it because it pays out a big multiple versus its likelihood to happen. Or sometimes something isn't it's very likely to happen, and it pays out a really small multiple. It pays out 1 to 1. Like, you risk $1, you make $1, but it has a higher chance of happening than 50-50. So it's EV positive. If you do it 1,000 times, you're going to make money. I do need to take a leak, and then I'll be back. I'll be back in a few. Okay, I'm back. Jonathan asks, do you even have a system with rules? I feel like you're the most discretionary, intuition-based trader I've ever seen. I'd say there's rules, but like a good example would be, if you've studied Elliott wave theory, is that book it's like a physics textbook. I mean, it's like 100 plus pages of very specific rules, but lots of caveats and exceptions. So it's like I before E except after C. It's like I before E is a good rule, but you also want to have the except after C. And so I think one of the things like about that, some things that can look like intuition are just kind of a bunch of rules and caveats and different things that you have in your trading, right? It's kind of like a good example is like when I took this ETH long, I wasn't really interested in the long until I took the setup. what would be a good way to explain this? It's like, for example, if I see something like this, I don't really necessarily have. I'm kind of aware of some of the structure here and levels, but I see this big wick come down, and then I see a bazillion shorts open up in order flow and all these different things. I could aggressively take that long, maybe, let's say. Where it's not something I necessarily had planned, but I'm taking it based on what I'm seeing. And that could seem like discretion, like why'd you take that long, but you didn't take a different one, or that setup and not that setup. And it's not really discretion as much as it is just recognizing a specific thing that I would say is clearly defined. But what I think what people really want in a setup, what their goal is, which is fine, is not really what their goal would be is just to say, okay, here's a range, and I'm going to short the top of the range here. And so when price gets up there, they take the short, and the rule is, they double the distance, let's say, of the previous high, and that's their validation for the short setup. I think that's fine. There's nothing wrong with that. And maybe they have a rule where it's like it has to align with the 618, and they don't take the trade unless it tapped the 618. So that's how they've defined the trade, and they've gone back and done their back testing and done forward testing. Oh, I'm on the wrong screen here. Shit. Whatever. We'll start here. So this is their setup. They're waiting for price to come up into this high, into the 618, and it's a very strictly defined setup. Now, what is the point? What is the point of defining a setup this way? Like, why would someone do it? Well, they want to know what trades to take when and why and where to invalidate them and have a reason to do anything, right? It's just a very simple way of thinking about the trade. But you kind of what you really want to do is you want to get into EV positive setup. So maybe after some time, you say, well, I'm going to call this, a region, and it doesn't exactly have to tap the 618. For my back testing and whatever, it's like the trade might look something like this or like that, and that'd be okay too. And so you would take that setup as well, and you'd enter here. But then you might say after a while that, well, even if it front runs, right, I'm still going to take the trade based on the rejection of the previous high. And I'll just, if price runs up into this level later and whatever, I'll still be in the trade because my stop's up here. Which that's something I do a lot, right? So a lot of the really nice setups I got into was a slight front run at the level on a sweep setup, but I'm just entering on the rejection. So this can start to seem discretionary, right? Someone could say, well, your setup was this, but I noticed that you entered even though this happened, or you entered even though price front ran. But it's not really discretionary. It's, in this case, you're just kind of giving yourself a region with the setup sort of being defined as a rejection below this high. And so now you've kind of broadened what can be expected here. But let's say that you have something like this, and price is coming up. So this is something else that I've added in that could seem like discretion, and price is grinding up into the level, and you have an up. I didn't really draw a good uptrend. This would be better. That you're not going to enter aggressively, like you would on necessarily an impulse and quick rejection. If price is grinding into the level, then you're going to wait for the trend to break. So that is something that let's just bring it down a little bit. So on one hand, here you have the trigger where you enter aggressively as soon as the level's lost. In this setup, you're waiting for the trend line break. And that seems discretionary because in hindsight, it will look like, well, you took the trade as soon as this happened, but on this time, you didn't take the trade. And I would say, well, because I'm waiting for the grinding up trend to break. And it's like literally right here. I need at least that. It's not just if this high is lost. It's where I'd enter in aggressively here. I'm not going to enter in aggressively here. So is that discretion, or is that kind of like an extra rule, right? And a good example of that is actually a specific, I mean, it's actually, you'll see it in a lot of my low time frame updates when I'm taking a trade. You don't have to define your setups that way. It's just kind of like an extra thing to notice, right? So when I took this ETH short, or Doge short, that is, look at some of these shorts, right? So here's a perfect example. I literally just said this. This is my setup on Litecoin, and that is the short I am in right now. But the idea was to take these highs into 618. I said, as soon as this high, oh, you guys can't even see this full screen here. Let me go here. As soon as this high was lost, I just entered, right? And that ended up being the absolute peak of top of that trade, right? This is like literally take the trade and price just goes straight down. But if we go to the Doge setup, I didn't enter in aggressively like that, right? I entered in it was actually right above it. Sorry guys, this was like 3 weeks ago, so I need to find the actual setup. And I actually printed this. Kind of cool though, this setup with Litecoin. So that's the short I took. I actually longed the lows, and I got a long TP into this, and then I shorted the Pico top. This is a rough setup, but I'm really just looking to short the rejection, right? So I'm updating, I'm waiting. This is what I have drawn out. I'm waiting. As soon as price goes up there and rejects, I take the short into the impulse rejection, and price in this case went straight down. Let me go to the Doge setup though, because it's a similar setup, but the trigger was a little bit different. You can, for people that I put in a lot of work in the Discord. All this writing is just me really explaining the process and the setups, right? So it's not just like a signal. I want people to actually understand. Let me go to, where the hell is that Doge? Oh, it's in here. That's what happened. All right. So the Doge setup is similar in that I'm really just looking to get into the setup. This is the 1 minute chart. So the high time frame chart, there's some triggers and ideas here, but I really just want to short into the break of this uptrend. So even as price is coming up into the level, I'm not just like, say this could be a line that you're like looking for rejection. I'm not going to short while this grinding uptrend is just going straight up. Why would I? At least wait for the breakdown to scale into the short. In this case, we get the breakdown, then price just nuked, right? But yeah, so anyways, it's something like that. And that can seem like discretion, but it's kind of, it's rule based, but it's like experience rule based. It's like, I don't necessarily say like, if there's a grinding uptrend and it has 47 touches on the lower trend line and it's coming into your level at a 47-degree angle, because like people want things like so well defined, but you really just have like a set of basic structures on high time frame, medium time frame, low time frame that you're kind of aware of and you're trading around, right? So is there a grinding uptrend right into the level you want to short, or a grinding downtrend? Well, hey, maybe at least wait for that to break. That sort of thing. Someone says, where do you send your signals? I want to just make something clear. I share my setups, like it's up to you guys to decide if these are signals or not, I guess, in a way, but I don't want them to be used as signals. I want them to be used to understand. So I shared the setups I trade in my Discord And I do it for educational purposes. So there's a shit ton of educational content in here that you should go through if you're a member. And, you know, you watch all these videos and you read all these breakdowns and explanations of various concepts. And like in this channel, you'd want to start kind of at the top. I know it's a lot, take a little while, but basically covering everything from technical structures and the emotional side of trading, the psychological aspects, the mathematical aspects of trading and all that stuff. And then I take all of these things I teach and I demonstrate them in the market every day. So I will plan out my trades in a similar way, right? So I'm basically saying, hey, so the updates will basically follow like this sort of pattern of updates where I'm basically saying, here's a write-up explaining the setup I'm looking for on a high time frame, and here's the setup approaching. I'm preparing to take it. And I made a video in this case. And then as the setup is approaching, I'm explaining I'm preparing to take the trade. So here I was just saying, you know, and I'm updating it in low time frame, right? So I'm explaining, I'll update when I'm taking it. Here I'm watching minute by minute. So some of these updates are like minutes apart where I'm saying I took the position. There's a 90% chance I'll end up long here anyways. I'm explaining the low time frame. Here's the 1 minute chart, you know, but we're at this key level. And here's the long I'm in. So it's not a signal to that I want people copying that they just don't understand what I'm talking about or what I'm doing. They're just trying to copy trades. It's to demonstrate these concepts in a live environment, because it's really easy to make a 15-minute video based on like some past occurrences of something and say like, here, you look for this. And then it's like, this is your trade setup. And even if a setup is very simple, like, you know, like the Litecoin, you know, short setup I took up here, or the Doge short setup I was talking about. In live time, it's actually kind of hard to see these setups, right? It's hard to plan for them, and it's hard to execute them on a live chart. So I like to demonstrate it. I mean, I think it's kind of like having a professor that is, instead of just showing you a textbook, you have the textbook that is showing the concepts, but he's there trading every day in the market live. And it's way easier to understand a concept if you see it 30 times live as it's happening, taking the trades and what those trades look and feel like, than it is just seeing a concept explained and then trying to duplicate it on your own. Because the market looks really clean in hindsight, and oftentimes it's very hard to get like, especially as a new trader, it's like having blinders on. Like you can't see, if you go into replay mode, like you can't see this idea to short here when it's happening. Like that's like, oh, holy crap, Litecoin's going straight up, I better long that thing. And like this would be a great long, and then, you know, this happens and price goes straight down. And then in hindsight, you're like, oh my God, it was that setup that exactly like was explained, and I had a perfect entry trigger. Why didn't I just take the short? But what I'm doing is I'm saying, hey guys, I'm preparing to take the short. I'm in a long from here. I'm getting TP. Price is approaching my level. I want to enter aggressively. Price wicks the level. I've entered my short, and then price goes straight down. So it's like you get a feel for some of that. And one thing I like to think about it is, like, another way, I'm not, like, I use trading setups I see that aren't mine. If I understand a setup and I like a setup, well, I'm just going to trade it. I'm not like, it needs to be my idea. It's like, if it's an idea, I would trade otherwise and someone else posts it. But one way that I like to imagine that somebody could use these setups is as like a baseline, right? So it's like, if I've won, you know, something like whatever, 12 of my last 10 trades, and you've seen exactly how I've executed them and planned them and whatever. It's like you can kind of get a baseline for like what feels different about my setups when I'm trying to trade them. Or my recommendation to everyone as a member is start off paper trading. There's no reason to expect you're going to make money, that you have any of the skills you need to make money as a new trader. The market's not going anywhere. Capital preservation is the most important thing when you have no personal trading history, no personal trading data, no expectation to make money. And don't just think because you're copying somebody that you are just instantly going to get the same result as them. But paper trade all of my setups. I mean, I basically write them. I write out like a thesis on every setup, and I say exactly when I'm executing it. So if I've just won 10 trades in a row and you've just lost 20 trades in a row, what is going wrong there? And especially if you're trading the same asset. So get into can you win with let's say, for example, with let's call it a perfect setup. Like, I'm not saying I go on loss streaks, I lose trades too, but if you're a member in the Discord, you'll know I'm consistently winning in let's call it an extraordinary way to most traders. Like, whoa, short of the top, long the bottom, short of the top, long the bottom. If you're trying to copy that trade, can you? So if it's like, okay, I'm entering this long. I'm saying do this with paper trading, fake money. I'm entering this long. Can you enter it? Okay, I'm gonna take profits up here. Oh shit, I closed it here and then price went up and then I FOMO'd and I longed into the top and then it went down, so I closed at a loss and then I did it again and again and again and again. And somehow I was trying to do the same trade as you did, but I lost 50 trades. It's like because I closed it too early, then I tried to get back in and I got scared. And then you'll start to realize, whoa, I have this problem where I can't sit in trades, or I close them immediately as soon as they're in profits, or I enter and then price starts going down and I say I cut my trade. Are you saying I'm not cutting it? I think I don't have to take a loss here. I think it's going to go up, and then price goes like this and I got out here and you're holding it all the way down to down here and you blow up your account. And so it's just sort of like, can you even just follow a trading plan? Like, one thing that people, it's not that you can't have any discretion in your trading, but one thing I recommend for people trying to become proficient traders is don't worry about deviating from your plan to get like kind of like, oh, should I just exit here? Like, let's just say that I'm long here on Bitcoin. You know, we have or Litecoin, and we have a lot of volume, and I want to target here. So, and I'm saying, oh, this looks like a pretty big rejection. Should I close this early instead of trying to carry it to the highs? Sometimes that might make sense to do, right? And you could manage your position that way. But if you can never hold your trade to a target, no matter what is happening, don't worry about the discretion in certain conditions. This was a really nice rounded grinding uptrend, by the way, into an impulse. This is something I talk a lot about, but concern yourself more about, like, if you say you're going to do something, I'm going to enter here and exit here and stop loss here, can you at least do it even once? And after you can do that consistently, then start thinking about ways that you can use some discretion. But yeah, so anyways, I mean, it's like, are they signals? Not really. That's not what they're intended to be, but they are precisely explaining trading setups and executed live, because I just think it's wrong. I mean, I even just think it's wrong on like on so many levels to not actually do it live. I mean, if you're not trading live, it's just, even if you're taking the trades and you're sharing the honest truth in hindsight, it's just, there's something about the reality of executing a trade live that is not there. Like, it's like the soul short. It's like you got to take it live. You can't just say, see, look, and it all broke down. Although I'm not going to be surprised if this does this, honestly. We'll see. Just kind of wait for this. Sometimes these really, like, these kind of sharp pullback things like to end in impulses. We have pretty big bullish divergences forming on Bitcoin. But depending on how you structure it, you have a lot of room. So there's so many things could talk about. It's kind of hard. I pointed this out earlier. Like we have the big bullish divergences forming on Bitcoin. So like longing into the lows of this trend line as an aggressive long on low time frames makes a lot of sense, right? Like longing into all of this aggressive selling, any kind of sign of strength, getting a TP1, and that's a very specific setup. But anyways, maybe I'll do some live scalping. I'll probably do it just the members. I hate, you know, I hate doing live trade stuff that with people that don't know anything about trading, like they haven't taken the time to learn anything, because they're just going to get wrecked and they're not ready for that sort of thing. So I'll probably do it as a members live stream. Yeah, so someone said, the same person asked if there's rules. He says, so it's semi-rule based on your experience. Thanks for the answer. It's rule based in a sense, but they're not like, there's lots of caveats and but you don't have to, most people don't have that kind of experience, right? They shouldn't even be trying to do that. Like, it's okay. I mean, I give most of my setups as just hard to find setups, and maybe I share some like caveat type alternate ideas, I guess. Do you ever get hyped by your win streak so that you are tempted to volley some gains? No. I mean, I guess hyped about my win streak in the sense of like just as a recognition. I mean, you just can't like, it's just, you can't not recognize that like Pico bottoming shorts and longs. Not saying I didn't lose any trades or haven't lost any trades in weeks, but the consistency of like absolutely destroying the market it's just, no one's doing that. I mean, like it's to the point it literally looks fake. It looks like it's impossible. And so to kind of have it that dialed in is pretty sweet to be that dialed in. But it's not actually it's not that long of a win streak for me. I had like a 30, something like a 28 or 30 trade win streak a couple years ago, and all the setups were like 20R. Like literally on alts, I was like Pico topping and bottoming 30-40% moves with really tight invalidation, and that was insane. That was like, it felt like I could never lose, but I knew I would eventually lose, obviously, and eventually I'll run into a loss streak. But the way I trade can run into it usually doesn't run into long loss streaks, but it can run into long dry spells, but it can run into some crazy long win streaks, high RR win streaks. So you're kind of aware of that can happen. Fox says, how do you look to differentiate between looking for sweeps versus continuation? Well, a good rule of thumb is if price is not rejecting and it's continuing, then it's not a sweep. I mean, there's a really simple way to think about it, which is price trading above or below the level? Like a lot of times a strong sweep just looks like a wick, right? It looks like it's you could call it sharp price action. Like the low looks like this. It's just like straight down and a strong reaction. It's not like spending a lot of time consolidating under the level, and that's a sweep. Now, of course, sometimes price can sweep a level. A sweep and a retest is a pretty strong signal for, if you're trading a sweep like on ETH. This is good because we have lots of lows. A low gets swept, a low gets reclaimed. Here we have an established low, we have a sweep, we have a retest. So this is all kind of like perfect sweep, retest, strong reaction, retest, price action. But a breakdown, oftentimes there's going to be a reaction even if the level breaks down. So here's one. We have a low. This is on the 30-minute chart. There's a reaction, and then price breaks down. And there's another reaction, and price breaks down. I'd say I'd be wary of a level getting washed out, but at some point you're going to just want to look at if this is happening, right? If this is actually just trending, like downtrending structure into the level. Usually you want price to, honestly, like if you look at major lows, you want price to move quickly away from the level. It's spending a lot of time below the level. There's also nothing wrong about just cutting a trade and then reopening it. Like you might be long here, you might cut it and then reopen it into the strength as well. But I think a general rule is if price is trading above the level or below the level, this is a sweep. Might it go back up? This is really nice because you have the big rejection and then you have a lot of weakness, like this rounded, grindy structure. But yeah, I mean, a lot of times when people ask, sorry guys, fuck, I hate when I do that. Okay, well, I was pointing out these sweeps. Like you have sweeps, retests, that kind of thing. Like this is sweep, strong reaction. You know, if you're entering in aggressively here, then you have this rounded, grindy price action. Here you have, I give an example. Where did I just point that out? Oh yeah, where you have an initial reaction off the sweep and then you start getting this kind of trending price action. So instead of having these kind of sharp reactions, quick reactions, which are usually pretty good to, you know, that's what, when you're going for an aggressive trade, it looks kind of weird when you're going for an aggressive trade and then price just breaks down like this. Looks weird if you entered in aggressively here for this and then this happening, you just cut it. And sometimes I do that where I'm saying I'm entering for the sharp aggressive reaction scenario like this. I'm chasing it aggressively, but if I don't get that strong continuation, I might just cut it, right? But a lot of times when people ask questions like how do you differentiate between the two? The base of that question is that they're looking for a way to not lose trades. And sometimes you just take the trade and you take the stop loss. If you take the trade and price keeps breaking down, you just cut the trade. If you want to reopen it on another reclaim, you could. But it's like to say, like, there's no way to know, is price going to sweep the level and keep going, or is it going to break down again? You just put on the trade and you have invalidation. I mean, I always like to see, like, when people have trouble with those setups, because I trade them, like, sometimes you'll have members who they'll which I think is fine, and oftentimes they're paper trading, like trading low time frames, testing stuff, but like I'll have won 8 trades in a row and they'll say like I'm on a 19 trade loss streak since yesterday. And it's like, it's whenever I take the trade, you know, it doesn't work. And you have to see some of their setups, and either they can't produce any of their setups, like they don't even have the setup, there's no chart. They're like, I long because there was like a bullish reaction on someone. It's like, where do you take it? And when you get down to it, they're taking like 10 losses in this. It's like, well, they're like, well, on the 10-second chart there was a sweep. It's like they're not really applying the concepts very well. And so you kind of have to like, they're kind of like, you know, they're longing here, and they're like, how do I know if it's a sweep or if it's going to keep going? But it's like, well, they're not really trading a level. They're just, it's like, so what my point is, they're really misdefining those types of setups, and it's just always interesting to maybe see what they're actually doing, because if you're trading like clean levels, usually the level either sweeps and holds or it doesn't and it breaks out, and sometimes it washes around a little bit. but it's usually not like a really complicated scenario. It's either just usually a loss or a win if you're applying the concept appropriately. But the other thing is, like, if we get into order flow, you want to see something. I like to see is a lot of shorts opening at the lows, getting trapped, and a lot of longs opening at the highs, getting trapped. So I don't really, I mean, I will just say that there's kind of bullish order flow here on Bitcoin. It's kind of would be interesting to be scalping, honestly. You don't really, but like when you see all this bullish, you see this grinding downtrend. Sol kind of has it too, which I'm honestly not going to be surprised. This is a case where it's like we have some technical weakness, like with this downtrend breaking, whatever, but this is actually kind of strong price action for a potential impulse locally, even though structurally you could say that the uptrend's broken. I don't even need to look at Sol order flow. I don't love this as a local short because it's kind of like this sort of thing. Grinding, impulse, grinding, impulse. And that's kind of happening here on the low time frames on Bitcoin. Big bullish divergences. So scalping into these lows makes a lot of sense. In my case, you also have a breakout here. You don't also have a lot of resistance here. So like seeing a quick move into this could play sometimes. And hopefully I lock in a TP1 on my longs. I don't use market scanners for patterns. I mean, I have really high time frame theses on a lot of charts, and I have look on XRP, I have longs from lower, and then I pay attention to price action, and I just market all my levels and do it all manually. I know generally, like the thing about Doge is, for example, I'm trading towards all-time highs. Like I long Doge a shit ton back here and it went up 400%, but I'm trading all these longs into a much bigger high time frame thesis to $1 plus. And so every day when I'm looking at like structure like this and trying to pay attention to it, I'm really trying to compound into a higher time frame thesis, right? So I'm trying to get the most out of those moves and hopefully have like a situation like this, which this swing long back in 2024 was very similar to this swing long that I'm in from down here. I want to get in a situation where if this happens and price goes up 400%, I have multiple longs that I've stacked into this price action on Doge. And so those are the things I'm kind of looking at. I'd say this: start reading through the Elliott wave stuff, and you'll see how highly defined all the rules are, but how complex it is. There's so many different structures and variations, which makes sense, right? Like the market doesn't just do one or two things. Like it doesn't just break out of triangles, or sometimes it breaks out of a triangle, but it's into a different structural resistance or whatever it is. So you need to, it makes sense that if you want, let's put it this way, you're not going to watch a 15-second or TikTok or a 15-minute video and be able to nail the top and bottom of all these moves, right? Like, would it make sense that considering how messy the market can feel or seem sometimes, that if you want to be performing in all environments and catching all these moves one after the other or the other, you have to have more than one or two tools in your tool belt, right? And not every trade is going to be defined by one rule or setup or like, yeah. And so for that said, I don't use market scanners or anything like that. I mean, I analyze the market based on my manual analysis, let's say. And things change, right? Like things change based on what is happening on any given day or moment. I don't know if you remember or not, Jacob. He says, how do you pull your fibs? Oftentimes I'm not getting the same levels as you even when I'm charting. I pull them lots of different ways for lots of different reasons because of some of that can be because of Elliott wave stuff. And I have some simplified versions of, how I might pull fibs into like something like a trending structure, or which can be like previous trending touches or origins of impulses. So like this would be sort of an example maybe where you're pulling from the origin of this trend, the origin of this impulse, which can sometimes just shorthand into how you would pull a fib for based on an Elliott wave count. And I understand, like I kind of have some shorthand stuff that's just like my own thing I do if I don't have a local count. But sometimes you won't get the same levels because I'm on log scale, and if you go into settings into your fibs, you might have to turn on fibs levels based on log scale and change the chart to log scale, or vice versa. But yeah, I would say, generally speaking, I can't, there's sort of an interesting dynamic with me and like something like what I'm doing with the educational content in the Discord, which is you don't need to know everything to trade profitably. You don't need to be the most profitable trader to ever live to have a good career as a trader. And I have to talk to a lot of different types of people, right? So if there's, 1,000 people on watching a video, or 1,000 different people reading a post on a trade, you're gonna have people with 5 years experience. You're gonna have people who've been in the Discord for 2 years. You're gonna have people that joined yesterday or brand new traders. And so there's a balance between explaining different concepts. But one thing that I don't like to do is limit myself to like a lot of times a new trader, and this isn't a knock on anyone who has this kind of sentiment, and it's normal, but a brand new trader will come in to say the Discord and they'll not understand stuff. So they'll be like, hey, I just started trading. I joined yesterday and I read your update. I don't understand any of this that you're posting. Could you make it simpler? It's like, well, that's because you don't know anything. I mean, if I picked up but I can't limit myself to somebody who's never traded before, and that is as far as my sets can go. What you need to do is go through all the educational content and understand these concepts, right? I do my best to explain everything I'm sharing and why and the reasons, but there's just certain things. Like there's people who might join, and I mean I've had somebody who said they have a lot of trading experience, but they don't know what a fib is, right? So and I talk about fibs all the time, and I pull them, and I have short videos explaining how they work and how to pull them, and I have longer videos explaining stuff. But they're saying like, what are these two lines here? I don't understand what those two lines are. It's like, well, you have to go through the educational content. I mean, these are simple things that I can't explain every time I take a trade or set up a trade saying these two lines are a fib. They get pulled from left to right, from this high to this low. The reason fibs can be use as a confluence or significance is this, and do that 20 times a day for every new member that joins, right? So there are going to be things that you just don't understand, and you got to take the time to watch the 15-minute video explaining them and that sort of thing. Tony, are you a member? So, because Tony asked, how do you swing trade? I have strategy, but it is mentally tough. I tried to extract as much as possible while it's going my direction, then add more, but haven't had so many successful swing trades. Is it low probability? But I saw that swing trades give insane returns when it goes to your direction. I'm asking about the psychology, how you feel, and how do you deal with it. And so, okay, no, you're not a member. So the reason I'm asking is because these aren't questions you can answer in a moment. These are. I mean, I can answer generally speaking. If you're taking this is a big problem, so it's going to apply to a lot of people. If you're taking swing trades every day, there's a problem. Okay, you have a huge problem. Because swing trades don't come every day. By definition, a swing trade is a high time frame trade setup. So let me do something. This is going to help you and many others. So one of the ways that I swing trade is I don't take swing trades every day. I take swing trades rarely. And when you think about it, you think about, well, yes, swing trades are low probability in the sense that they don't happen every day. So if you're taking a swing trade every day, you're going to have a really low success rate. If you're taking swing trades when you should be taking them, you can have a high probability of holding a swing trade, but they're not going to come very often because they can't, right? So I'm going to show an example of this. Give me 1 second. It's just difficult because like I can't give you an answer that's going to, if you're a member, then I could give you some more stuff in the Discord, but give me 1 second. But I can do a little bit to help you here. Okay. Please tell me I'm not looking in the wrong channel here. I don't need you guys believe me, right? I mean, I've posted it, whatever. I'm not gonna go back and explain this. All right. So this swing trade I posted when price was here. I needed price to come down almost 50%, right? I said I will be interested in a swing long if we can come and retest this level. I literally drew out exactly what happened. I then put an alert, I tucked this chart away, and I waited for a month and a half to take that trade. So what happened is I've got a Pico bottom swing long on Doge, and then price went up 100%. But I can't take a swing trade every day, or I'm going to take 50, 60 swing trades and only one is going to work. So one of the reasons that people have a hard time taking swing trades is what they want from the market. And I've actually had members say something like this. They'll say, I noticed that you haven't taken any swing trades in a while. like I saw, let's use the Doge trade. I saw you took that Doge trade and went up 100%. Can you do more trades like that? I've been here for a week, and this whole week you haven't taken any trades. Can you do more trades that are swing trade? I said, well, I have swing trades planned, but I'm not deciding what the market does. So like, I can't say, well, I want a trade that makes me 100. It goes straight up 100% from entry. So I'll take a swing trade here. I can only take a trade like that when I'm presented with a trade like that. And sometimes that means that you are waiting for a while, right? You're waiting to seize that opportunity for what should be a swing trade. And like for me, if I got this on Doge, that it's not to say it will work or it won't work. It will be a swing trade. Not every trade I take, I took a long from lower here on Doge, and that wasn't a swing trade for me. And it could have been that, price is going to go straight up. It wasn't a swing trade in the sense I TP'd early, right? I TP'd at these highs and price could go higher. I'm still going to carry some of it as a swing, but like a trade like this or like this, I'm not going to TP and get rid of my position because I have so many opportunities to trade low time frame levels all the time. Why would I treat a high time frame level as a low time frame trade? But vice versa, why would I treat a low time frame level as a high time frame trade? So you have to be trading the time frame you're trading on. If you're on the 5-minute chart and you're longing this sweep of this low, but you're treating it as a swing trade, you're going to have a horrendous time because you're going to round trip everything. It makes no sense to be longing off a level that didn't even exist 4 hours before. It's okay to long this, but it's not a swing trade, right? Are you going to be surprised? Oh, that swing trade didn't work. Oh, I'm going to swing long this. Oh, that swing long didn't work. And so, yeah, that's the best I can do. I mean, I do it all the time. Take swing trades, Pico bottom swing trades. Sorry, the term isn't all the time. I Pico bottom the move for my swing trades all the time, but I'm not taking swing trades all the time. So I might find the bottom of the move for my swing long, and that's where I took my swing long. But it's because I'm just accepting the time frame of the trade I'm trading on. And so if I want a swing trade, I wait for swing trade levels. But what people are doing is they're swing trading the 15-second chart every day or something, or the 5-minute chart. No, the trade doesn't always have to be from the same point as the trend line. It's just a shorthand I use in some situations in trending price action. It can be from last trending touch. It just depends on the setup. But you can obviously pull fibs from swing lows and swing highs, and it gets kind of complicated because the proper way to use fibs is really in the context of to find your pivots is you have to whether you're using, different levels could be pulled like with GAN theory or with Elliott wave theory or different things, and you can pull fibs at different pivot points for different timeframes for different reasons based on the structure, right? Because like if you have like internalized structure that is zigzag or internalized structure that is a flat or expanded flat or something like that, then your fibs are actually, the most relevant fibs are internalized and they're not like, this high or whatever. So yeah. But I have some pretty good, I think, shorthand ways to pull fibs that is pretty solid, that you don't need to necessarily know all the theory behind it. But usually swing highs and swing lows are the way to go. Either origin of the impulse or swing high, swing low. But let's just say like structurally relevant levels is a good shorthand. It's like, well, you wouldn't want to pull your fib from, let's say you're pulling this fib. It's funny because it actually is the 618, just eyeballing it. But you might not say like, okay, well, I'm going to pull, my fib from the base of this 1 hour candle as your general thing, or from this one, or just picking random candles. You might say, well, in this structure, we have 1, 2, 3 relevant lows. This is a trending structure, so maybe I will pull a fib from here. The impulse, the origin of the impulse. So after the last retracement, price impulse, here's the origin. That can be a nice rule for a short-term fib, or from the trending origin or the last trend line touch can be another one, but it just depends on the context. It's possible, Tony. It's possible you could get a free membership. I mean, you can share stuff in the public Discord, and it's possible. I won't make any promises though. Reese asked if I've ever had to make changes for things that for a certain setup that didn't work, but or worked once but no longer does. I mean, I've made small adjustments even recently, and like sometimes you're just kind of making adjustments to kind of how you're executing a trade a little bit, like in different environments. But I had a series of front runs that I wasn't losing trades, but it was like cost me like, I mean, I forget how many there were. There was like 5 or 6 0.01% front runs on my longs on this uptrend. Like this was a long, multiple longs here. So this is so bad when it happens multiple times, because these were all really tight setups, and it's just basically tagged at low and continuation, and we got all these little front runs. And so, one adjustment I made, and it wasn't just those, there was actually a bunch of them, was it was like 5, and it cost me a lot in what would have been wins, right? So it's like I didn't lose, but I lost winners. And I just made the adjustment of entering in on low time frame strength a little bit before the level, basically the same setup. So for example, when I took this long on Bitcoin, the idea was to come and tag these lows, take these lows, and we front ran the lows here, and so reacting, I just took the long. I'm like, it's the same setup. If we come back and tag it, great, whatever. I'm seeing some low time frame strength, so I'm going to take it. We got a little rally and then a pullback. And the same thing again on some of my Litecoin setup, for example, this short, we took the high in this case, but it's kind of hard to see. There's a little high here, but it's like we front run the 618. I just entered, and I'm just, it's like front run PTSD a little bit, where it's like it's the same setup. Like it's just not worth waiting for that exact. It used to be like Bitcoin used to trade a little bit differently. There used to be this like every bottom was the same setup essentially, which was, take this for example, you have the low, you do this, and you double tap the low and just tag it and then impulse. And we started just kind of front running it. So it'd be like you have the low and then you have a higher low. But we used to get something that looked more like this a lot, where you have the low and then you come back and you tag the low. And this was like the just Pico bottom setup. Here's another example, and I remember these because I took this trade as like a 35 or 40 hour long, and into a new high, and super tight invalidation. And it was basically like the setup you looked for every single time there was a move to the downside. You have the low, you run the low, you long, and you make money. And it would happen on low time frames. I'm on the 4 hour chart here a lot, but like here, you can just see it all the time that this would happen. It kind of stopped happening, and where the low would come in and the new low, here it's happening. The new low, I remember this. I literally remember taking these trades, this one and this one. Like I Pico bought this on a live stream, but this is literally the setup I was trading, right? It's just like, oh, it looks incredible. Like it literally looks like so bearish. Obviously it looks bullish there, and I Pico topped that TP, and I took a short there because it was the exact 618 of the move. It's just funny. I don't know if I have a good or I took it on the front run of that. I don't know if I have an exceptional memory, but I think maybe it's because I write so much and talk about my setup so much, I just remember them, because this was like in 2023, and it's like I'm literally in the moment when I took some of these trades. But anyways, this was like it's like it looks so bearish on the low time frames, like price is dumping, you long, and then it's like straight up, and you would get this kind of setup all the time, and we stopped getting it. Is my point. It all started like front running, so it's like this. Instead of taking the low, you put a higher low and you impulse this. Instead of taking the low, a higher low, and you impulse. I mean, the truth is you're affecting the market to a degree, right? With the decisions you make and all those things, but it's just for whatever reason, that started to define the lows a little bit better, like a low, higher low, higher low, and even on just the low time frames at the bottom. So the bottom kind of patterning kind of changed a little bit. So that's like an adjustment of a setup that's like, it's still nice as an idea. Like sometimes you tag the low, but it's like if you are missing 20 trades because you only take it when it sweeps the low, maybe you have to make the adjustment that you're not only taking the setup. If it takes the low, you're taking it off of low time frame strength, and then you encompass like you might have to trade the low as well. But I mean, we're just seeing a bunch of examples like how that's changed over time. So I mean, even like this, like it's just like a higher low front run. Here we took the low. So it's not that you never do, but it used to be like every time you saw this wick would take the low. And it doesn't really do that so much anymore. But this was kind of it. I mean, this is old. Maybe we're back into old school setup territory. But this was like a way to get like a really low risk Pico bottom long or short pretty consistently for a while. Well, so you're asking a question like you're saying you want to switch to full-time trading, but you have a full-time job. You're struggling because in your paper account you can see you can make a lot more, but I can't switch totally to full-time. The thing is, if you don't put yourself into a really precarious or stressful situation, like whether or not because it's going to affect your trading. If you have a family and you have kids and a wife and people who rely on you, and you don't have a big runway of cash like to pay expenses where you don't need to make money trading for a certain amount of time, quitting your job is going to be a pretty tough route to keep, staying consistent with your trading. And when you're starting to put that money at risk and you're switching from paper trading, you're saying in your paper trading you're seeing good results, you need to start live trading with small amounts of risk from your paper trading and see if your edge starts to deteriorate. Like the process I would recommend pretty much let's just say you're starting from new trader, you're a brand new trader, day one. I can't really write with these arrows. Paper trade. So you're paper trading and things are going good. Your equity curve looks like this. You learn stuff. It was really bad, but you've kind of figured it out. So now, let's say you have $100,000, or it doesn't matter. let's say it's $100,000 that you have, or $10,000 or 1,000, just round it to any number. You don't put all that money into a trading account and start whiffing it into the market. You take a small amount of money, essentially a meaningless amount of money, and you say like, are my results the same? Does my equity curve look the same, or does it just also look like this? Or does it look like this? It's like, whoa, what's going on? And you might step back to paper trading, or if it was a really small amount of money, you might review all these trades and say, why did this happen? And you realize, oh, it's as soon as I have money in the market, I'm making all these decisions. So you need to play around and get your equity curve looking like this with real money, and do exactly what you did here. Because paper trading is sort of like, as a brand new trader, you don't know anything. So you're not learning anything by risking money, because you don't know anything about sizing, all just like really practical stuff, how you're defining your trade. So you just learn that with paper trading. You can do it perfectly fine. Once you kind of understand exactly what you're doing and why, you're trying to duplicate it with some money. And once it goes well, like let's say you're risking, $10 per trade, so $250 over 25 trades, and you get a good 25 sample, and you say, okay, this is going well. I'm going to step up the real money I'm trading a little bit and see if it's still going well. It looks the exact same. Ooh, okay, I've made it. I'm going to step it up a lot more. Whoa, what's happening? Okay, I need to go back. I just quadrupled the size of my account. Things are not looking good. So, okay, the same thing that happened here the first time I went to live money is happening here. I need to figure that out. I need to step back to a size I'm comfortable with. Okay, things are going good. I'm going to step it up a little bit more, and just keep doing that. I know it's a boring process, but what most people do is they'll say, I'm going to start with all my money. And then they lose everything. And they say trading's really hard. Or I'm going to learn with all my real money. Whoa. This is really bad. Their emotions they don't know how to trade without emotion. They've never built a baseline for what should be happening, and you really don't need a ton of emotions. The analogy I use, if you want to become a brain surgeon, you don't start with your first day one doing an operation on a live patient. That because you need to learn, because you need risk and you need emotions. No, you don't even know anything. Like, you don't know what you're even trying to do, where you're trying to cut. You just practice on a fake brain. Actually, you probably read a book first. You read a book, you get taught a lesson, you see somebody else do it, then you get a fake thing, and you slowly progress until you don't need all that emotion of having someone's life in your hands is not going to help you learn better. It's going to make you an emotional wreck, and you won't be able to learn anything. So you'll walk away from brain surgery school before you ever get anywhere. So if you're single and you're whatever, same thing applies. Like, you got to cut down your life expenses and make a go of it. It's like starting any business. But if you're only paper trading right now, you don't really want to put yourself in a bad situation. Reese says, highly recommend all who have not joined the LATF, that's my Discord, even for 1 month, download all the educational. I still watch them over time to time. I mean, the one thing that I really am proud of is, I would say, for the vast majority of people who are in the Discord, have joined the Discord, would highly recommend it. I mean, whether it's people who have been in there for 3 weeks, or people who have been in there for 3 years. And you see so much stuff online where people are like, this person I joined, it's a scam, or everything's a lie. It's like, knock on wood, that's not the members. That's not the things you hear from members of the Discord. It's like, when you do posts online, I don't always have most members don't post. I've had lots of testimonies in the Discord. Don't have high volumes of posting on the X. Every once in a while, I'll ask members, like, hey, would you do like a little testimony or member review on this Twitter post or X post, just so people can read it. But yeah, I mean, if it was all bullshit, my comments would just be because there's a lot of members that would just be full of people being like, this is all bullshit. Yeah, lots of amazing testimonies. I have some interest. I'm keeping an eye on Sol here. This is just one of those things that seems like discretionary caveat stuff, but this isn't really bearish. I mean, it can get bearish, but you're kind of expecting this to impulse to the upside. I've explained it already. I mean, it's just kind of hard. One thing that's hard too, when you talk about like trade setups, it could be like this ETH or Bitcoin idea for a short here even, where when the price comes, like I'll do my updates and whatever, and depending on what happens, I might not even take that short, right? Or your plans change just based on what's happening, and the truth is you'll never know what will happen. Like it looks like I know what will happen if I planned out this long at the top and it is exactly where it bounced. I just understand, let's say I understand the market well enough to be right often about what will happen or won't happen, let's say. But what the best thing I can have at my disposal is to see what is happening. So like when a level's far away, how you actually trade it can change based on what is happening, right? So what is happening is important. So anyways, and that can be like order flow, like we have these big bullish divergences forming on Bitcoin. Yeah, I spent a lot of time in the Discord, and I haven't been live streaming as often, but I do want to start doing it again. I haven't live streamed in like 4 months. That like the one thing is I don't really do a good job of all the things like whatever I should do on social media. Like I should be putting out YouTube videos or live streaming. It's like I went like 9 months without posting a YouTube video and whatever, but because I haven't live streamed in 4 months, I did want to do a bit of a longer live stream today. Maybe it's like 2 months or 3 months. But I probably will start doing some live trading sessions again. Well, and I spend a lot of time in the Discord. I mean, in some ways, the Discord's like a trading journal for me. It's, I'm planning out my trades, I'm executing my trades, and it's a little bit of extra work to kind of share and explain what you're doing, but, it's essentially just the trades I'm taking. And I'll have conversations about concepts and stuff with members and do some educational write-ups and stuff. But I really trading is my life, right? So, um, it's something I enjoy. It's something you have to find a bit of a balance, of course. Um, because it's also a lot of work and it's tiring, and like I might spend 5 or 6 hours analyzing the market in a day and executing trades and stuff, and you don't always have the like mental capacity to like have like chit chat conversations with 20 different people. But I like hanging out. I like the people in the Discord too. I mean, there's a lot of members that have been in there for literally years, and they're in there every day and trading every day, and I'd say there's like some really good traders there. So it's, yeah. Alan says, I believe you could start a small hedge fund. Hey, why not a big one? Or public investors can invest in your company, but you're spending your time on this Discord, and I would really like to know what the purpose is. Well, I have a lot of reasons for it, but the most important thing for me is that people are getting value and that I'm kind of helping people. You know, trading is just, I guess if anyone here is has been trading for a while and has some experience with it, everyone's gonna have their own experiences. But generally speaking, it's a pretty destructive thing for most people, right? Like it's not a good thing for most people. Whatever people are expect it to be, it's not anything like that. And the reasons that people get into trading, whether it's desperation or some kind of fool's hope in a sense, it's quite common that people have like a complete misconception of what trading is, and then they have really life altering or even life ruining outcomes from trading. And ultimately everyone's responsible for their own decisions and stuff, but if you get into trading, as you're likely to have just statistically, most people lose most of their money pretty quickly. I mean, you know, it's a very small percentage of people that make money, and ultimately everybody goes about it the wrong way. And trading is the barrier of entry is like nothing, right? Like you see like a TikTok video and you're like, oh, I want to buy a fart coin, and then you're trading the next day, right? You put all your money into it and you're like, what? I lost 90% of my money. That guy said it was 1,000x gem. And there's another trader that has a bad statistic, so to speak. But most of the time, I want to, and I feel grateful that I've had this impact, I guess. I want to help people who are really trying to avoid some of the pain and to have success. And sometimes the pain is some parts of the pain are unavoidable, but you don't have to ruin your life to succeed. And so, yeah, I mean, I've kind of been, it's been important to me. I mean, there's a lot of people in the Discord who I think have really put in the effort. They really care, and they're having a lot of success, and that's rewarding. But a lot of the things I do in the Discord are just literally me planning out my trades and executing them, right? So it's like, it's things I'm doing anyways, just so frankly. It's like when I plan out all my swing longs and whatever, and write up, do a little write up on those trades and then execute those trades. I mean, the work has to be done regardless. So I just, you know, there's a little bit extra effort put into making it accessible. Can you give an example of your mindset with scalping current price action on whatever coin you like? Just loose ideas of how you see what's happening, for example, on 1 minute chart. Ooh, sneaky. Jacob's trying to get some signals. Yeah, well, you'd be looking at kind of key structure, right? Like this kind of like, it's almost like a check mark kind of type price action where it's like there's a big impulse and then like a really controlled sell-off is pretty common for, you know, getting a nice little continuation trade. It just depends on the setup. I mean, I probably wouldn't short these local highs, but you're looking at, you know, just like when I shorted this, I'm just looking at these horizontal highs. I mean, you basically have a range building here. So this is a range low, this is a range high. So you have 1 rejection, 2 rejection, 3 rejection. You come up and tag the high, and you get this wick rejection, and so I would chase that down as a short. I actually took profits on that short here, and yeah, so that would be like a scalp setup. I mean, you'd identify ranges. This was a range. You know, this is a case where I would just say, I don't really like shorting these highs as a scalp. Short them aggressively. You're not surprised to get a reaction, but you have this grinding price action. It's almost actually perfectly trending price action. And so it'd be a case where, well, pull this out. I mean, it's almost this rounded grinding price action as well. This can die down, but I don't like shorting into that kind of local strength. I would probably just say, like, if I'm looking at this, that's the trade for me at this point. I mean, come up and run these highs. Could be a short setup, and looking for weakness and a rejection, and all this local price action is, it's not that it's washed out, but it's, to me, it's like check marky price action. It's like it's all getting run most likely, especially with this grinding structure. So I wouldn't want to counter trade it. You could long. I mean, the longs are a little bit better at the lows, like into the trending structure, into the reclaims. I wouldn't be surprised if you have like really clean looking stuff down here. But one thing about scalping is, like, the thing that you have to recognize is that your goal isn't to necessarily be in a trade every second or trade everything. You're still looking for clean setups. So, you know, your goal isn't to basically always have a way to say, well, here's the 15-second chart. You know, what exactly is it going to go up or down? I need to open a position here. I wouldn't really. I mean, I wouldn't be surprised. I wouldn't short this. I wouldn't be surprised to see some kind of pullback, and like maybe you get something like that. I wouldn't long right into the level either. I mean, you could just say, well, if I'll just long for the uptrend to hold and put on a little bit of size, like that position I shared earlier. I feel like a little bit of your intention opening your long here is just to kind of catch up on a move that you missed. Like if you're scalping, you probably want to be running into the lows here. With this, but yeah, definitely, I think it's instructional, I guess, to say I wouldn't have shorted this high because it's just grinding rounded price action into resistance. Yeah, there's just so much. I'll do a scalping live stream sometime, but Tony says planning and people drawing skills are not so important for me, but execution is hard. Well, and so how do you get better at it? How did you improve? Well, you do it a lot, but the other thing is don't just execute and without any purpose, right? Like, Tony, can you go back? Would you be able to go back and walk through your last 10 trades? Could you go through and say, like, okay, well, I executed this trade here for this reason, and this is what I did right, this is what I did wrong, and this is where I went wrong? Are you learning anything from what you're doing? Are you reviewing anything from what you're doing? Yeah. Alan says, almost 2 years ago, I discovered trading. I was spot trading only before for years, and I lost all of my father's money. I was at my personal bottom at the time, and I saw you posting on Twitter. I watched your live stream, and I only joined your Discord because I wanted to contact you to ask for money. But you gave me something different instead, knowledge. I was studying the Discord for these last years now, and right now I have the feeling that I'm about to make it, and I almost got the lost money back. Still some work to do. These are some short sentences for you, but it has been a complete change in my life for me. So just wanted to share this and say thank you. Well, that's awesome. I mean, is your name Alan in the Discord? Because I remember an Alan in there, but probably hasn't posted in a while, maybe. But that's a cool, I mean, thank you. I appreciate that. Kind of a cool testimony that a couple years ago you lost a bunch of money, your father's money, and you joined the Discord to ask me for money, and then ended up trading yourself out of that hole almost. Yeah, it can. That's the one thing. It's unfortunate, but if you lose 90% of your money, you have to make 1,000% to get out of the hole, right? And you can lose money pretty quickly trading. I appreciate that you sharing that, and I'm glad that you're having a positive turn in your journey. Talal says, how much minimum margin to start trading? Like if someone want 5K profits in a month. So you have to understand that, that's not how it works, right? Like I can't say if you want to make, 5K a month, then you need $100,000. And that's because you don't have it. You shouldn't expect to make anything. You should tell me, because there's not like a rule that says a trader makes 5% a month, 10% a month, 15% a month. Traders make all sorts of different amounts per month based on their ability. So if you don't, it would be like this. Imagine I'm a hedge fund, Tillel, and I say, hey, Tillel, how much money should I expect to make this month? You'd say, I don't know. What are you doing? I'm like, I don't know. I'm going to trade. It's like, how would you know? You don't have any of the data. So you're the only person that knows how much money you should expect to make because you're the only one with your trading history and data, right? Does that make sense? So if you don't have any trading data, and you're a brand new trader, let's say, you shouldn't expect to make any money. If you're anywhere like 95% of the people who start trading, you should expect to lose money as a trader. So because you don't have any experience. So that's why I suggest paper trading while you're a beginner, because you're just statistically going to lose money. And as you develop those skills, you'll be able to tell yourself how much money you could expect to make based on projecting your own personal data and performance into the future. Does that make sense? Someone asked, do you hold spot for some coins as longer term hold/investments, or do you just trade? A common question, and the answer for me is that it's all the same. A high time frame holding spot or a high time frame trade, if I'm long for Doge for 5 months or a year and a half and it prices up 100%, it's just a swing trade. It's not, I don't look at it as, holding for an investment. I want to take my swing trades at the lows and I want to hold them to the highs. A lot of people will say that, an investment is just you buy anywhere, you don't have a plan, you don't have an invalidation, you just hold till price goes higher and you don't know when you're exiting. It's like, so really it's just a swing trade that is poorly executed with no plan and probably has no edge. For me, an investment or a long-term hold is just a swing trade. It is a trade that you take on a high time frame with high time frame entries and goals, and just because it's a swing trade, you're not necessarily wanting to long here. You want to wait for pullbacks, and I use the exact same concepts I'd use, but I could end up holding a trade for a year and a half, right? So it's just a swing trade, but I still structure the trade. I use risk management. I use precise entries and targets. So yeah, to answer your question, I do swing trade, but I don't differentiate between long-term holds and a trade. It's just a trade on a high time frame. The goal of any investment or trade would be to make money, of course, and to limit risk and to maximize the return, right? So the best way for me to do that is with trading. Thank you, Kyson. He's long-term member in the Discord. It says, very good live stream, listening from Greece. I'm on vacation. You're explaining things to people so good. I will fall asleep. Your voice is deep like a book narrator. Have a great sleep. Jacob says, hypothetical situation. You marked your high time frame level, but you missed it due to work, not looking at charts, and price moved by, let's say, 5 to 10% while you were gone. Do you still try to ape in the setup or move? It's very circumstantial, because sometimes that can make sense structurally, but you have to readjust. It's not the same setup, right? So you have to readjust the setup to something locally on a different time frame. Like maybe you missed this this Doge long, let's say, and this is a perfect example because price would have been up about 10 or 15% here. So this was your peak of bottom long, and you missed this long setup, and now price has gone straight up, 15%, and then you have this structure form, and you enter into the trade there, and you just set up a new trade. So that would be a way to get, potentially, you might get stopped out, but potentially a new tight invalidation setup instead of just entering here, or you're just entering in to a much wider setup, and the risk reward is still reasonable, but you have to size it appropriately. But if I do that, but it's kind of different for me because I have so many different ways of getting into clean setups on lower time frames that, like, I'm not just gonna be like, oh no, price is up higher, I'm just gonna FOMO enter. I would just wait for local structure and then just structure a local setup into a swing idea. And what people will find oftentimes, like, it's like when I have literally a bottom long here, or I had bottom longs on XRP before this huge impulse. Like I had literally had a long here. I longed like quite a few times into this grinding low time frame price action as swings, and so caught some massive moves, and I did it on Doge, because just because I have a long doesn't necessarily mean I don't want any more longs. And the same thing kind of on, I took a long here on Doge. I still have my swing long from down here, and I still want to add into my longs into local price action if I get the opportunity. So I would probably just, if I missed a long, quote unquote, I would just structure a new setup. I wouldn't try necessarily to just chase a setup randomly. Yeah, well, I don't know. Maybe this has been a good live stream. Maybe it hasn't. It's hard to say. Hopefully it was good. I probably will do them a little more regularly than I have been. Maybe at least a public one once a week, and probably try to get on to do some more members live streams. Maybe if you guys want to stop by the Discord and in the public Discord and just rate the live stream 1 out of 10. But one thing that people get wrong is that they, like, people want the live stream to be full of, like, I'm taking this trade, long now, short now. But a lot of times you're just, trading is just waiting for levels, right? So it's like, to time a live stream like exactly as this hits or whatever, a lot of times it's just preparing, and you have many hours of either holding a position. You don't get paid for entering positions. You get paid for entering positions that move in your favor and holding them until they're in some significant amount of profit. If you just enter, close, it's not a good way to trade. So Well, unless you have an edge on really low time frames or you're scalping low time frames. But mostly you're just trading and waiting, planning and waiting, and looking for good setups. All right. Well, thanks, guys. I'm going to pop out of the live stream here, and I hope you all have a good day.